big uptake in vaccinations because people still want to live their lives.
Yeah, Francine, I've come across at least one person in my circle here in France who said it doesn't make any difference to her. She's not going to get the vaccine, despite the fact that it means that she probably won't be able to access quite a lot of the amenities that you just mentioned. But I think if that's what people want to do, and if they want to go to restaurants, to bars, etc., they need to have it. Of course, not every service provider is going to be able to manage this. If somebody's got a terrace the size of 100 people sitting outside, I don't know how you manage that when somebody comes and sits and goes and with 2 or 3 staff. But aside from that, in general, for indoor eating, which I think is what's most eating and entertainment, it's going to be putting an incentive on people who were undecided to go and get their vaccines.
Mm-hmm. All right, Sam, thank you so much. I think in France you can do a PCR test actually for free, but we'll dig into that a little bit later with Sam Fazeli, our senior pharmaceutical analyst at Bloomberg Intelligence. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. A $550 billion U.S. infrastructure package has cleared its last procedural hurdles in the Senate, setting up a vote for final passage as soon as Monday. The legislation was moved forward in 3 votes that showed it has broad bipartisan support. But there was no immediate resolution on amendments still on the table, including proposals for new cryptocurrency rules and use of unspent pandemic relief funds. Wildfires raging in Greece have threatened villages, spurring further evacuations on Evia, the country's second largest island. Blazes that began almost a week ago due to a heat wave have cut across the popular summer destination, destroying homes and businesses. Thousands of residents and tourists have been forced to flee. Taliban fighters have seized the 4th provincial capital in a week in the latest blow to government forces as U.S. troops complete their withdrawal. Officials say the group took control of the governor's office, police headquarters, and the main prison building where 500 inmates, including Taliban fighters, were freed. It's the 4th provincial capital to fall to the Taliban in less than a week. Football superstar Lionel Messi says there's a chance he'll play for Paris Saint-Germain next season. Barcelona confirmed last week that after 17 seasons, Messi's contract would not be renewed after the Spanish league's salary limit scotched a deal. The 34-year-old was emotional at a news conference, saying he'd been expecting to remain at Barcelona, the only professional club he's played for during his career. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thank you so much. We should do a whole show actually around Lionel Messi and football. Now, coming up, we'll look at your stocks to watch, including European energy companies after oil extends losses as a resurgence in COVID cases raises concerns about the demand outlook. This is Bloomberg.
It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
What were the numbers from the equities division? How well did it do?
Well, first 28% decrease as compared to a very, very good Q2 in 2020 is a good resilience, and it's a decrease that is much smaller than the one we have seen with some competitors.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning.
back to the open. We're 7 minutes from the cash equities open. Now let's get your stocks to watch with our Joe Easton from our equities team, because futures, actually, we've seen a bit of a reversal for the CAC 40 now unchanged. It was earlier down. All right, Joe, help me get my head around Philip Morris buying an asthma drug.
That's right. So we've got this fascinating bidding war for Vectura in the UK, with Philip Morris coming in and raising its offer price for the company. I think what's happened here is that when Philip Morris initially announced the offer a few weeks ago, there was quite a big pushback. As you referred to there, it's quite unusual for a cigarette company that sells products like Marlboro to come in and look to buy an asthma maker. So there was a bit of pushback, even some politicians asking questions about the ethical side of this deal. And we saw Carlyle come in, kind of see a position for them to come in and try and outbid Philip Morris. But Philip Morris seems to be saying, we're not going to move away that quickly. We're going to stick around and fight for this. There is some analyst commentary out there this morning saying that perhaps the valuation is now a little bit stretched. So I'm not sure whether we'll see more bids coming in from Carlyle or elsewhere. And the latest offer price is just above where it closed on Friday. This could continue a little bit longer, but we'll have to wait and see from Carlyle now.
All right, number 2 on the list, Hargreaves.
That's right. So Hargreaves had this massive boom year in terms of new client acquisitions. This is mainly coming from the volatility from the pandemic, with new people coming in and trading, and also the whole the Reddit craze that we saw at the start of this year. And the question now is whether this continues or whether that eases off as people go back to work, and the Reddit theme is not so popular at the moment. The company does say they've seen a bit of a slowdown in demand for share dealing, but they do emphasize that their client base is just a lot bigger now, and they should be able to cross-sell other products in pensions and other kind of retirement products to those customers. And they're keen to emphasize as well that the average age of traders trading stocks now has actually dropped about 7 or 8 years over the last 5 or 6 years as well. The average age of people interested in investing is a lot lower, which is positive for their long-term growth.
Joe, in 5 seconds, energy stocks.
Energy stocks should fall after a really good week last week. The outlook for the variant of the virus is going to weigh on those shares this morning.
Great, Joe, thanks so much. I'm also going to catch Joe Easton off air to talk about Lionel Messi, really the only stock that we should be watching is football stocks today. Coming up, it's the market open, just minutes away. Futures pointing to a lower start. The open starts shortly. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How are you navigating what seems to be a really tough situation better than almost anyone else?
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
Welcome back to the European Market Open. A minute to go until the start of cash equity trading, and here are your headlines. A bumper job reports raises bets that the Fed is closer to pulling back stimulus. Biden's $550 billion infrastructure bill clears its last hurdle before a Senate vote. China's factory inflation surges, bonds and commodities sell off. Goldman slashes the nation's growth forecast as the Delta variant spreads. And U.S. COVID cases hit a 6-month high as Anthony Fauci says the vulnerable should get a follow-up jab very soon. So let's also look at the futures. Now, there are quite a lot of things going on in the markets. First of all, if you look at the futures, they're pointing to a down day. This is on a number of things. First of all, precious metals today are definitely tumbling because traders are wagering that Friday's strong employment number in the U.S., stay with me, that data will actually move the Federal Reserve closer to pulling back stimulus. So let's see how it opens right now in the European Open to see whether it has a very strong impact on equities. Of course, this is also with crude oil extending last week's decline, the worst since October, on concern that Delta variant strain will actually hamper demand growth. You can see the FTSE, as expected, down a touch, but it's really iron ore. Some of these golds, gold is one of the biggest stories today. Oil down, and again, it's once again growth concerns because of Delta variant. You can see the Spanish IBEX there down some 0.14%. Then for treasuries, just be careful because if you look at the U.S. 10-year treasury yield steady in early London trading after climbing, there is a holiday also in Japan. So that has an impact on the treasury market. And then Chinese bond yields gaining after inflation data came in above expectations. You can see France, the CAC 40 also opening there pretty much flat. If you look at the UK, the FTSE is down some 0.2%, but overall, it's a market that is trying to find a direction, probably because of that much better than expected jobs data on Friday. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Philip Morris is heating up the race for asthma drug maker Vectura Group. The Marlboro Cigarettes company has offered 165 pence per share for the British manufacturer of inhalers and nebulizers, trumping an offer from Carlyle Group. The new bid values Vectura's shares at just over £1 billion. TikTok owner ByteDance is reportedly reviving plans to list in Hong Kong by early next year, despite the widening Chinese tech crackdown. The Financial Times says the listing may take place either next quarter or in early 2022. It says ByteDance has been working on addressing data security concerns raised by Chinese regulators. Virgin Atlantic is reportedly considering a public offering in London. Sources say executives have been holding discussions with bankers and potential investors and could announce the IPO plans within the coming months. The decision would mark the first public opportunity to buy shares in billionaire Richard Branson's flagship carrier. Warren Buffett took a step back with his capital deployment in the second quarter. Berkshire Hathaway repurchased just $6 billion of stock, the lowest amount of buybacks since mid-2020. It was also a net seller of other stocks for the third quarter in a row. That's despite having more than $144 billion of funds in the war chest. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Laura Wright in London. Now, European equity markets opening, mixed bag, really. If you look at the FTSE, it's down, but actually the CAC 40 is pretty much unchanged. The U.S. labor market charged ahead in July with the biggest increase in employment in nearly a year, highlighting optimism about the economy's prospects, even as coronavirus concerns resurface. Well, Bloomberg TV guests weigh in on the latest employment numbers and its implications for Fed policy.
Another incredibly strong jobs market report.
Very strong report.
across all metrics.
Across the board, favorable report for the economy.
Leisure and hospitality jobs, those were amongst the top gainers.
The service sector really shows that this recovery is coming in full force.
This is a critical node for the Fed. It's not just, woo, we just got one big report. It's a month after month.
Maybe this transitory inflation that's supposed to be short-lived is going to be with us a bit longer.
The risks and costs are mounting.
This is not going to be an earlier tightening, but it could be an earlier tapering.
This is going to embed itself, and the Fed risks falling behind the curve.
Very encouraging, very consequential report, but I think the next payrolls report is going to be the decision-making report for the Fed.
Well, joining us now is Simon French to get us started for the week on this Monday morning. Panmure Gordon, Chief Economist. Simon, great to speak to you as always. First of all, Simon, when you look at what we heard in terms of the jobs data, yes, on Friday, everything blends into one, but it was Friday, and what you're expecting from the Fed, does it change anything in terms of tapering, or could it also mean that they tighten sooner than we expect?
Well, morning, Francine, and a pleasure to talk to you too. I don't think it changes our calculation for when the Federal Reserve will taper their asset purchasing program. We said about 3 months ago that we thought that the June and July report would need to produce a cumulative 2 million jobs added in order to get the sort of hawkish pivot at the Jackson Hole meeting coming up at the end of August. Now, they're a bit shy on that, about 1.7 million jobs. Not a bad performance, but we're still anywhere between 6 to, I would argue, upward of 10 million jobs light of maximum employment. Now, that's the threshold for interest rate increases. In terms of substantial progress, I still think we're a bit light of that, and I expect we won't get an announcement until December in terms of a reduction on the 120 billion.
So, Simon, is there another data point that you're looking at? I think we have CPI this week. Is it the next jobs report that could actually make a huge difference, or no matter what, you wait until December?
No, I do think that this week's CPI data is relevant. There is expectations, my own included, that we will see a tick down from 5.4 to perhaps a little lower, 5.3, 5.2. I think if we see it picking up, which would be, yes, the data is volatile, but I think the tolerance level from FOMC members will be tested should the base effects that we have seen push up the midsummer data look like they're going to persist into Q3. So I do think that data point is important. Yes, future jobs report on that progress towards full employment is relevant, but that's probably on a slightly longer time scale in terms of the first Fed funds rate increase. In terms of tapering, I do think these inflation data points over the next few weeks are relevant for where consensus moves on the FOMC.
Simon, what does that mean for treasuries?
Well, I think we've thrown in the towel in terms of 2.5% for the end of the year on the 10-year, just because, look, you have to give the Federal Reserve their credit of the credibility of flexible average inflation targets. I thought that you would see a reduced inflation premium because of an expectation that you'd have a period of catch-up, but quite how unprepared bond investors are to go against the Federal Reserve has taken me by surprise. So I do think, while I still think the risk-reward is favoured in terms of selling off and therefore rates being higher, I don't think the scale of that move will be like we envisaged at the start of the year.
Simon, overall, I mean, there's also concerns about China and China growth. The number of cases are quite small, but we understand that they could take some pretty drastic measures to actually close it down to make sure that it doesn't spread more. Is the biggest concern to the world economy the Delta variant coming through China, or is it, the infrastructure bill leading to inflation sooner than expected?
I think it's the latter. The reason I don't concern myself too much by the China growth story, at least specifically not in terms of handling COVID-19, is if you look at the recovery from the pandemic, the economic performance since the first wave of COVID-19 hit in Q1 2020, China has been ahead, both in terms of the healthcare response and the economic response. Maybe not on the vaccine response, but I think in terms of being able to take the measures to control that and return economic activity, I don't see that as too much of a risk. I'm not sure the risk hugely is in terms of the inflationary impact of infrastructure either, because, of course, programs will know that you announce the funding envelope and you're at least 2 years away from when shovels, either metaphorically or indeed physically, go into the ground. So in terms of fueling the inflation debate, which is very much near term, don't actually necessarily see that as a trigger.
Yeah, speaking about the inflation debate, Simon, so we heard from the ECB's Weidmann warning once again that inflation may pick up sooner than expected. I mean, is this just because it's the German point of view, or do you think there's something in the numbers that could lead us to worry for inflation in Europe?
Well, Jens Weidmann has got the data on his side here in terms of inflation has been higher than most forecasters had envisaged, not just in Europe, but across the UK, in the US, in China. Those base effects have also been fueled by what has been a rapid economic recovery by historical standards. But you do need to step back always and say, well, what is your policy prescription that is iteratively different from the current governing council stance? And this is where I think I would disagree with Jens Weidmann's comments in terms of the interpretation. The policy has to be different. I don't see there is a case the policy has to be different, given the structurally deflationary risk is still far more of an economic risk than some near-term undershooting causing a decoupling to the upside. If that is a risk the Jens Weidmann sees, I'm afraid I don't see it.
Okay, Simon, thank you so much. Simon French there, Panmure Gordon chief economist, stays with us, and we'll talk a lot more about pound next, because coming up, the Bank of England's hawkish turn reignites the pound's pre-pandemic strength. We discuss the outlook for sterling and for the UK with Simon French next. This is Bloomberg.
Less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it, because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open. We're 12 minutes actually into the European trading day, so let's take a look at what's on the move this morning. Now, a couple of the stocks, first of all, if you look at European stocks, so the futures were really pointing to a lower start, maybe not as bad as we were expecting. Overall, the European stocks futures are, not futures, the indices are gaining some 0.1%. I know it's not huge, it's nothing to write home about, but look, it's better than the futures were indicating. Then, a couple of things we need to watch out for. Let's start with Deliveroo. So these are the biggest gainers. I was looking at why Deliveroo with the help of our producer, Abby. Thank you, Abby, for always making me smarter. Deliveroo is actually rising because Deliveroo Heroes holding 5.09% of voting rights. Unsure exactly what that means going forward. For the moment, the market seems to like it, which is why Deliveroo is gaining 3.8%. One of the biggest movers today. The other one is Pandora. Now, Pandora actually came out with some figures, I believe, a little bit earlier on. So this was a couple of months ago. I'm not sure whether it's just a buying opportunity on the back of what we heard. Again, the financial guidance for 2021, this came out a couple of weeks ago, was a little bit better than expected. Maybe it's a buying opportunity right now. And then the other one, which is what Pandora, just a reminder for everyone, was very popular, especially with teenagers and women from 20 to 30 years old, because it has a modern jewelry made from silver that had a hand finish, so I'm told. Hargreaves, this is the other one that we've been talking about all day. Our Joe Easton was also bringing us up to date with exactly what was going on in Hargreaves, and you can see that stock, one of the lowest today, down some 8.69%. Pre-tax was short of estimates at £366 million. The estimate was £381 million. They also issued a dividend that was 26.6. Again, a little bit of disappointment when it came to, I think, the net income or some of the new business inflows. Now, the pound could be about to enter a new era of strength against the euro, all thanks to the Bank of England's hawkish turn. Traders have raised the odds of a rate hike in February to 60% after the BOE made clear last week that it's beginning a countdown to end the era of rock-bottom borrowing costs. And it's giving sterling the momentum it needed to break past 85 pence per euro, a barrier that had been intact since early April, to hit its strongest level since the pandemic began. Well, Simon French, Panmure Gordon, chief economist, is still with us. So first of all, Simon, how did you interpret what we heard from the Bank of England last week?
Largely as expected. We got one dissenter, Michael Saunders, who wanted to see an immediate end or a near immediate end to the asset purchasing programme. But the Bank of England have been relatively consistent throughout the year that they want to see the fourth quarter navigated in the UK economy. And some of your viewers may wonder why the fourth quarter is so relevant. Well, the furlough scheme, which has protected at its height actually 9 million, 1 in 3 UK jobs, gets withdrawn in the fourth quarter. A lot of the forbearance on rent, on tax, is being removed in the fourth quarter. And therefore, I think you mentioned correctly, I think, in the introduction, that bets are being brought forward for an early rate increase in 2022. And I think that is consistent with this. The fourth quarter is navigated, then you start to get the case, given the inflationary backdrop, for a relatively early, at least by developed market standards, rate increase in the UK.
Yeah, so what does that mean for pound? And I think, looking at the charts, 60% of traders are expecting for an increase in February of next year.
Yes, and I think that we are constructive of gain on the major two cross rates, more actually against sterling euro than against sterling dollar. I think at around 140, it's not a long way away from par value against the dollar. But I do think there's still some upside, up to probably 125 versus the euro, on the basis that historically the Bank of England has hiked about 9 months after the Fed. And I think it'll go first this time round, and that'll be unusual. So that will provide broader strength to sterling on a flow of funds basis. But also the fact that the economic recovery should start to pick up in the second half of the year vis-a-vis Europe, and we get the Q2 data from the UK on Thursday this week. But I expect Q3 and Q4 to close the gap and indeed overtake the pace of the EU recovery.
Simon, when you look at, I know there's been some of the things, carry trades that we've looked at, or for example, sterling yen. Is there anything out there in terms of currency pair that you think is interesting because of the dynamics that the market hasn't really quite caught on to?
Well, I do think actually yuan dollar is an interesting pairing there because, of course, the strength of the yuan has been part of the sort of unexpected story. We talked before the break around the China growth story, how that would be impacted by Delta. But there are some broader structural issues that the Chinese economy is trying to work through, the Premier Xi's administration. And the playbook for, over a number of years, actually, has been that China has, as it's been trying to introduce structural reforms, has loosened its monetary policy and hence weakened the yuan in an attempt to try and lean in against, introduce those structural reforms, but provide some stimulus to try and counterbalance. And therefore, a weaker yuan against the dollar, a potential legacy, if you like, or an impact of that policy mix.
Simon, thanks so much, as always, for joining us. Simon French, their Panmure Gordon chief economist. Now, coming up, time for a booster. America's top infectious disease expert, Anthony Fauci, says the vulnerable should get a follow-up COVID jab soon as U.S. cases hit a 6-month high. That story is up next, and this is Bloomberg.
Never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
We do think that the rate at which this variant is spreading should require that we think carefully about particularly vulnerable people, older populations, certain health-affected individuals whose immune systems may be weak, that at a minimum we should get ready to be able to offer a third booster shot to those and perhaps a larger number, and that's what we're waiting for the CDC and other health organizations to determine.
We need to look at them in a different light than the durability for a normal person, which means that we will almost certainly be boosting those people before we boost the general population that's been vaccinated. And we should be doing that reasonably soon.
Well, that was the Moderna co-founder, Noubar Afeyan, and America's top infectious disease expert, Anthony Fauci, speaking about COVID-19 booster shots. Now, for more on the spread of the Delta variant, our senior pharmaceutical analyst at Bloomberg Intelligence, Sam Fazeli, joins us. And Sam, we also have a Bloomberg scoop, a great story. A story that is really well read on our Bloomberg terminal, saying that the EU is now expected to discuss reimposing travel curbs on the U.S. Is that purely on the numbers of people infected with COVID-19 in the U.S.?
Yeah, it seems to be, Francine. I mean, there's nothing else specifically going on in the U.S. But the problem for the United States is that it's really not the United States. You have some states that have got like 70% vaccination rates, where they are seeing exactly what we've seen in the UK and I think in continental Europe, in terms of significantly reduced severity of disease. But then you have others that are below 50%. So you've got this situation as to how do you treat the totality of the United States. In any case, all our travel plans seem to be, or rules seem to be decided by the number of cases, irrespective of how severe they are.
Yeah, so I was going to ask you that, actually. So if I'm, the authority in the EU that decides collectively who should be banned from coming on holiday, is there a metric that's I don't know if there's a ratio of vaccinations versus, number of cases, because of course that reduces, how much you can transmit it.
Yeah, I mean, Francine, I really don't know what formula they use. I mean, if you think about it, when the UK put its quarantine for French travelers until today, for the past few weeks, it wasn't based on case counts or case counts per capita. It was based on some percentages of what they thought they were seeing from the Beta variant, which was a bit nonsensical because there were higher rates in Spain, and Spain wasn't on the Amber Plus list. So these rules seem to be, I'm a bit worried that they're made up as they go along. They sit around the table and try and figure it out. Francine, we've always been saying that together that this is something that has to be worked out internationally. How do we reopen our world?
Sam, do we need booster shots? And I don't know whether we call it booster shots or just a third shot, because the second vaccine shot is already a booster.
Yeah, I mean, boosters are a very difficult subject, as you know, Francine. We've talked about this a little bit in terms of, we have societies in the West that are opening up for people to have all their freedoms, and then we have societies elsewhere, countries elsewhere, who don't have enough vaccine even to start with the normal vaccination to reduce their morbidity and mortality risk. So that's a big discussion, and it's very tough to get into. The issue at the end of the day is some people would be having waning immunity, whether they're immunocompromised or older or whatever. And over time, we might all need a booster shot. So that's something that we have to square with what the world needs.
So, the other question is, of course, how much should we worry about the next variant? So do we really need to learn how to live with COVID-19?
Yeah, it really all ties it all back together again, Francine. If we're going to continue to worry about people catching, because we keep testing people, right? As soon as they have some symptoms, they get tested at different rates in different countries. So you find the virus. We never really do that for flu. We never really do that for many other viruses at all. If we continue to do that and base our rules and regulations around case counts, we're going to be constantly worrying about the next variant, because there will be another one.
Yeah. Sam, thanks so much. Sam Fazeli, our senior pharmaceutical analyst at Bloomberg Intelligence. Now, coming up, Alibaba fallout. The e-commerce giant fires a manager accused of rape after an account of the ordeal goes viral. We'll bring you, of course, a full story next. We'll talk about Alibaba. We'll talk about a lot of these Chinese tech giants as well. This is Bloomberg.
pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the Open, everyone. We're 30 minutes into the European trading day. Futures actually point to a lower start. Not so bad, actually. If you look at the European stocks, they're pretty much unchanged. They're gaining by a measly 0.1%, but still, they're in the green. And then if you look at the DAX, also unchanged, but in the green. It's only the FTSE 100, which is getting a little bit of pressure. Now, this has to do also with the repricing of certain asset classes. This is because of the jobs report on Friday, trying to give us an indication on what traders are looking at or when they're looking at the Fed to start tapering, possibly even tighten. Now, let's also take a look at what sectors are on the move. Now, this is a great sector look that you can actually do by typing GRRGO on the Bloomberg terminal. One of the things that we've been talking about a lot was precious metals selling off, gold also touching the lowest since March before losses. And so when this came up, I was actually quite surprised to see financial services. Energy we knew was going to be lower, but financial services, one of the biggest fallers in today's trading sessions. So energy stocks slipping, oil prices falling, but it's healthcare and tech stocks that are actually leading the gains among individual moves. We're looking at shares, for example, in Hargreaves Lansdown slumping 9% after the UK investment platform operator's earnings fell short of expectations. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Taliban fighters have seized the fourth provincial capital in just a week, in the latest blow to government forces as U.S. troops complete their withdrawal. Officials say the group took control of the Kuduz governor's office, police headquarters, and the main prison building where 500 inmates, including Taliban fighters, were freed. A top aide to New York Governor Andrew Cuomo is reported to have resigned as her boss contends with possible criminal charges over alleged sexual harassment. Earlier, one of Cuomo's accusers, Brittany Commisso, spoke out publicly for the first time. She told CBS that what Cuomo allegedly did to her was a crime and he should be held accountable. The New York governor denies multiple claims of sexual misconduct. Football superstar Lionel Messi says that the chance he'll play for Paris Saint-Germain next season. Barcelona confirmed last week that after 17 seasons, Messi's contract would not be renewed after the Spanish league salary limit scotched a deal. The 34-year-old was emotional at a news conference, saying he'd been expecting to remain at Barcelona, the only professional club he's played for during his career. Global news 24 hours a day on air and Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Laura Wright here in London. Now, Alibaba has fired a manager accused of rape, moving to contain the fallout after an employee's account of her ordeal went viral on social media. The incident exposed problems with the culture at China's e-commerce giant. Well, our China government reporter, Lucille Yu, is in Beijing for us. Lucille, first of all, walk us through the timeline of what we witnessed.
Yes, hi, Francine. So this incident really came to the public's attention this weekend when it played out over social media. The female employee involved in this incident said that the incident happened almost 2 weeks ago, and because she wasn't satisfied with how executives handled the case, she then took to the company intranet, publishing this very long account and very detailed account of what happened, including, as she alleges, that she was on a work trip, was pressured to drink, and then was sexually assaulted by a client as well as her boss.
So what are we watching for next?
We know that the case is under police investigation, so we are watching to see if there will be a criminal conviction. On Chinese internet, of course, there's a lot of commotion and a lot of people talking about this. So, we have lawyers coming out to say, what are your responsibilities if you even witness something like this? So it is spurring a lot of conversation around company cultures and sexual harassment.
Lucille, what does this mean for China's Me Too movement?
Yeah, so China's Me Too movement, which sort of gained prominence about 3 years ago, and we have had a string of very high-profile cases, but it hasn't really gained traction the same way it has abroad, and many of these cases are reported on and looked at as individual cases rather than a part of a larger movement. But we've had this case now, and of course, just a few weeks ago, we saw another hugely high-profile case with a celebrity, Chris Wu, who was also detained by police on allegations of rape. So these high-profile cases, again, bringing sexual harassment and women in the workplace to the conversation, at least online.
Lucille, thank you so much. Our reporter there, Lucille Yu, there from Beijing. Now, coming up, as wildfires rage in Greece, we get an update on the situation and talk about climate change. We're also expecting a really important UN report out in about 25 minutes from now. So we'll have a full roundup of climate news shortly. This is Bloomberg.
Beijing is promising a successful Winter Olympics in February.
Still, a number of hurdles stand in the way, starting with transporting athletes and delegations. Officials are yet to share quarantine plans, with borders now largely sealed off. Even full vaccination against COVID may not guarantee easier access. There's evidence China's shots offer less protection against the Delta variant. International fans could be limited, but Beijing may allow home crowds capped at 2/3 of venue capacity. For other social distancing rules, organisers will have paid close attention to the Tokyo playbook. We could again, for instance, see winners putting medals around their own necks. Infrastructure is where Beijing can shine. State media says all construction work is on track. But what about the snow? Skiing events will be staged in a desert averaging 8 inches of coverage per year. And China will be relying entirely on artificial flakes. That's raising environmental concerns. And then there's human rights issues. Some are calling for a diplomatic boycott of the Games. Critics, including US lawmakers, want a change in Beijing's stances on Hong Kong and Uyghur Muslims. Pressure is being applied to key sponsors, including Coca-Cola and Visa. China says any rational company will respond with the right judgment, particularly those who have benefited from its breakneck growth. With these games, Beijing has a chance to dazzle the world. Officials are said to want at least 5 gold medals. Another challenge for a country historically weak in winter sports.
A look there at some of the obstacles facing China's plans for the Winter Olympics next year. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Saudi Aramco's profit rose to $25.5 billion in the second quarter, the highest since 2018. Free cash flow rose to $22.6 billion, above the state-controlled company's dividend for the first time since the start of the pandemic. Aramco is the latest big oil giant to post bumper earnings, boosted by the recovery in prices. The company says it's positive about the second half. Philip Morris is heating up the race for asthma drug maker Vectura Group. The Marlboro Cigarettes company has offered 165 pence per share for the British manufacturer of inhalers and nebulizers, trumping an offer from Carlyle Group. The new bid values Vectura's shares at just over £1 billion. TikTok owner ByteDance is reportedly reviving plans to list in Hong Kong by early next year, despite the widening Chinese tech crackdown. The Financial Times says the listing may take place either next quarter or in early 2022. It says ByteDance has been working on addressing data security concerns raised by the Chinese regulators. That's your Bloomberg Business Flash. Francine.
Laura, thanks so much. Laura Wright in London. Now, wildfires raging in Greece have threatened villages, spurring further evacuations on Evia, the country's second-largest island. Blazes that began almost a week ago due to a heat wave have cut across the popular summer destination, destroying homes and businesses. Well, joining us now for more is our reporter in Greece, Eleni Shrepa. Eleni, you're in Teleios, central Greece, right across from the island of Evia where the wildfires are. What's the situation like on the ground? Is it getting better or worse?
Hi, Francine. The truth is that right now the air quality is absolutely terrible. People in central Greece are advised to stay inside. The fire in the fire front of the island of Evia, which is also very close to Athens, is still burning, and people are still evacuated by sea. Tourists as well. And there's a very big part of the island that has been burned. Actually, like the most part of the north of the island is almost completely destroyed. And according to the Athens Observatory, during the last week, over 250 square kilometers of land have been burned in Attica and Evia.
I mean, Eleni, the figures and the pictures are just absolutely horrendous. Are there any major power outages or business disruptions?
No. As devastating as the images are, and people losing their homes and animals being burned and forests being burned, this is mostly an environmental disaster right now and very indicative to the effects of climate change, I would say, as the Prime Minister as well said a few days ago. Greece was going through the worst heat wave since 1987 and record temperatures of 45 degrees Celsius. Fortunately, there weren't any major power outages, and businesses are running as normal, and tourism as well. But like local small businesses in Evia and farmers are going to have a really, really hard winter.
What does it mean, Eleni? I mean, are wildfires actually common in Greece? And what can be done about climate change?
Yes, this is the discussion of the next day discussion. I think that it's what the government should be looking at as well, because wildfires are very common in Greece. It's true that Greece has a history of devastating blazes. Very recently, in 2018, about 100 people died when a blaze broke out in a fire resort near Athens. And then there's, in 2007, a huge wildfire in the Peloponnese that killed more than 70 people. Luckily, this time we didn't have any human casualties because the government's priority has been from the start to evacuate all places. But there's really, this is really a discussion for the next day because it needs a reorganization of ways to protect, because the forests were not clean. There were a lot of wild dry places that just blazed in a second, and there's really lots of organizing to do.
Thank you so much, Eleni Schrapp, there, our reporter in Greece with this important story. Now, sticking with climate change, a United Nations-backed consortium of climate experts is set to release a major new climate science report today. Now, the last time the group put out a special report, it set off a swift chain of consequences. Protest movements erupted seemingly overnight. The term net zero was suddenly commonplace. Nearly 3 years later, most of the current momentum behind climate action can be traced back to that report. Well, joining us now for more is our climate reporter, Akshat Rati. So, Akshat, what exactly is this report, first of all?
So the Intergovernmental Plan on Climate Change was created back in 1988, and every few years it is asked to produce a report of what do we know about the latest in climate science. And as you would expect, over the years, the amount of research being done on climate change has dramatically increased. So every report that comes out is longer and more comprehensive, and the urgency to act through the science becomes louder.
So what do you think scientists will say, Akshat?
So this report has 200 scientist authors. It has 14,000 different studies, and we can expect, because many of these studies have already been published, that scientists will say that our planet is warming faster than it has in a very long time, perhaps hundreds of thousands of years, and that the only way that we are able to stabilize temperatures is if we bring emissions, carbon dioxide emissions, to zero within the next few decades.
So what kind of impact are you expecting, Akshat, from it? Is it people taking to the street? Is it, the climate summit in Glasgow finally having more teeth because of pressure from citizens, or is it something else?
So the timing of the report is such that it is going to feed into, as you said, the big climate summit that's happening in Glasgow later this year. And there is a lot of wrangling that is happening between governments today to figure out a deal. And what this climate science report, which has been agreed upon by 195 countries as a consensus of what we know about the warming of the planet, will add urgency and hopefully get governments to agree on a deal where there are currently differences.
Actually, I guess, my question overall is, if this is the biggest report of its kind, right? It's certainly the most comprehensive. There was an IEA report that really lit the fire, so to speak, under businesses because of some of the recommendations to deal with climate change. Is it, how is this report going to be different?
So the IEA report was a more prescriptive report because it says what you need to do to cut emissions. What the science report, which is a much more comprehensive report about not just the pathways we will need to take to tackle climate change, but what climate change can do in absolute details covering all regions of the world, will have an impact on how policy is implemented, not just in cutting emissions, but also adapting to some of the impacts, such as the ones that we saw with Greece on wildfires, or in North America, or the floods that we've seen in Europe and China. So this is a much more comprehensive report than what the IEA report was, because it's describing the physical aspects of how climate change is happening in more detail than we've ever had.
Yeah, thank you so much. And the report comes out in about 12 minutes. I know Akshat will be here with me to actually break down what we hear and what that means for the future. Our climate reporter there, Akshat Rati. Now, coming up, it's nearly time for Jackson Hole. That came fast. It's, I think, in about 2-3 weeks. We talked to Eddie van der Walt about what the big meeting means for gold. That's coming up next, and this is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Another incredibly strong jobs market report.
Very strong report across all metrics.
Across the board, favorable report for the economy.
Leisure and hospitality jobs, those were amongst the top gainers.
Service sector really shows that this recovery is coming in full force.
This is a critical node for the Fed. It's not just, woo, we just got one big report. It's a month after month.
Maybe this transitory inflation that's supposed to be short-lived is going to be with us a bit longer.
The risks and costs are mounting.
This is not going to be an earlier tightening, but it could be an earlier tapering.
This is going to embed itself, and the Fed risks falling behind the curve.
Very encouraging, very consequential report, but I think the next payrolls report is going to be the decision-making report for the Fed.
Some of our guests are reacting to this month's jobs reports. Now, we're 52 minutes into the European trading day. Joining us now from our MLive team is Eddie van der Walt. Eddie, I've missed you. I've been away for 2 weeks, and the first thing that greeted me in the newsroom was actually your tweet about cryptocurrency, and I feel like nothing's really changed. I go away for 2 weeks, we talk about inflation and crypto.
Absolutely. No, crypto absolutely on the way back here, sitting above $43,000 as we speak. I think one of the big things that's changed of late is that there's a little bit of change in the mood music in the U.S. with regards to the SEC and their plans to perhaps approve a Bitcoin ETF, as long as it is tied to a futures contract and not to physical Bitcoin. That's really significant for the Bitcoin market.
Yeah, and actually, I'm being facetious because there is quite a lot going on that's new to the market. So, for example, gold is really one of the big stories today.
Francine, you're playing to all my favorites today. My two top assets, Bitcoin and gold. So listen, yes, gold absolutely is in trouble. I think we looked at this on Friday after the jobs report, and I think a lot of people are looking at this and saying, hang on a second, if we start to see tightening in the US, that really is the end of the road for the gold bull, which was with us all through last year. And so in thin liquidity this morning, we saw a significant sell-off. I think gold was down something like 4% at one point. But that was in really thin liquidity, and it's come back a little bit now just down 1%. But don't forget, we're moving towards Jackson Hole, where the central bankers traditionally set out, their big picture assumptions going forward. And if we see a little bit of a pivot away from these fears about growth and, tilting a little bit towards the inflationary fears and therefore a more hawkish central bank backdrop, that's really the death knell for gold.
Yeah, so Eddie, how much focus, I know volatility has been pretty high. I don't know what volumes we'll see in August, but how much focus is really on the Delta variant as we try and figure out the kind of, the growth trajectory that we'll see in China and the US?
Yeah, the Delta variant, it's absolutely a factor. And, Goldman this morning downgraded its growth assumptions for China for the third quarter, but then said, look, but it's just going to be carried on to the fourth quarter. So I think we're seeing a little bit of that. We're seeing the Delta variant impacting markets for sure, but not on anything like the scale that we saw last March, right? I think people now know that there are going to be variants, that there will be vaccines when these variants come to play, that it might slow the pace of the recovery, but that it's not going to derail it, completely. So I think the focus is still a little bit more on inflation at this point.
Eddie, is there anything else that you're looking for? I guess there's quite a lot of data points, right? The CPI in the U.S. is probably one of the big ones. Is there anything else that you're looking at on the MLive team?
Yeah, markets are really interesting at the moment, even though volatility is quite low. I think for me, the big one, you mentioned it earlier, is gold. But I want to think back about 2013. And when we saw the taper tantrum then, gold was the first to sell off, right? Gold was the first to sell off, and it really broke with the dollar and with real rates. And real rates in the dollar only caught up months later. And I'm wondering whether this is what we're going to see again here, because don't forget, ETFs in gold still extremely elevated, something above 3,000 metric tons sitting in gold ETFs. And that's more than a year's worth of mine supply. So if we start seeing some of that come back to the market, gold could sell off more. And I think gold can be the canary in the coal mine here for rates and for the dollar.
Oh, gold. We're going to talk a lot more about gold with Eddie shortly. Eddie van der Walt there from our MLive team. Thank you so much. Now, that's it for the European Market Open Surveillance Early Edition is up next. We'll have, of course, a full roundup of what's going on in the markets. We'll talk about CPI. A couple of other things that we're watching is, of course, some of the asset classes. That goes to the market coverage, a repricing on the back of that better-than-expected jobs data in the U.S. And, of course, we'll talk Lionel Messi and football. This is Bloomberg.
offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we really preach the mantra of flexibility. I think we've proven throughout COVID that we could be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history through a flexible work environment. So as we head back for the fall, we really preach to all of our businesses to lean in and embrace this flexibility and go where the market goes. We're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
What were the numbers from the equities division? How well did it do?
Well, first 28% decrease as compared to a very, very good Q2 in 2020 is a good resilience, and it's a decrease that is much smaller than the one we have seen with some competitors.
Older populations, and at a minimum, we should get ready to be able to offer a third booster shot to those.
We will almost certainly be boosting those people before we boost the general population.
The majority of people that aren't getting vaccinated, it's a political thing, and it shouldn't be a political issue.
This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Biden's $550 billion infrastructure bill clears its last hurdle before a Senate vote. A bumper jobs report raises bets that the Fed is close to pulling back stimulus. China's factory inflation surges, bonds and commodities sell off, and Goldman slashes the nation's growth forecast. And the UN publishes a landmark report on climate change. This is expected to be the most comprehensive and most up-to-date report on the impact of global warming. So we're just looking, I think, at live pictures from Geneva, where we're expecting this report to be published. We're really just seconds away from that. The UN panel says that climate change is due to human activity unequivocally. I can't say the word, but it's basically that it's definitely down to us humans that there has been climate change, and then it's been extremely difficult to keep a handle on it. Now, we were speaking to our Akshat Rathi, who has been really over on this Bloomberg Green and Climate beat for many years, and he was talking to me about the key takeaways last time we had such a big report. Now, remember, you can always watch the press conference in full by typing live go on the Bloomberg terminal. We'll get back to Akshat in a second. He's been looking at the report, and of course, we'll see what this means for markets and businesses elsewhere. Now, let's get more on the markets first of all. Joining us now is Eddie Vadervalt from our Markets Live team. Eddie, we just spoke about the markets. I know there's gold you're watching. I know there's also cryptocurrencies and probably the dollar in between.
Yeah, absolutely. And, this UN report is really interesting. I don't think that it's going to have an immediate impact on the, on market sentiment. But what it does is it just puts the focus back on green bonds, on ESG, on all of those things that investors have been talking about of late. So I think this plays into all of those big themes that we have seen develop since the start of the coronavirus crisis. And I think, therefore, this is a continuation of the bullish situation for commodities and for copper in particular, because ultimately, if we're moving to a greener, more sustainable world, that world is dependent on copper.
So, Eddie, could we actually, if you look at how much more green bonds we've had since the pandemic, and you look at this report, and we'll get the laydown by Akshat Rati in a second, are you expecting even more demand for some of these green bonds? So it's not just that people look at this and we could get more pressure from citizens to politicians. It could actually make an impact on the markets.
Yeah, I think for a lot of people, we're well ahead of the curve of the UN. I think most people have accepted. Listen, humans have at least are at least partially to blame for climate change. So I think most people have already made up their minds on this. But I think yes, we do see that this just adds to that body of evidence that's driving people towards green bonds. And I think therefore, what the interesting thing is that just lowers the cost of capital for companies that want to do the right thing. There are problems with green bonds, and I know that the CFA Institute has recently launched an ESG qualification because they want to address some of these problems. And I know that Bloomberg itself has a data set that we look at for how adherent companies are to their ESG goals. So there are problems in making these bonds accountable. But I think ultimately it lowers the cost of capital for these companies. And if humanity is, I'm quite positive about this, because if humanity has seen over time, where we put our money and where we invest, we are able to solve great problems. Now, this is a great problem, but I think, the markets, as we see money flowing into these green bonds, I think ultimately that will help solve the problems.
Eddie, what's gold telling us today?
Yeah, gold very, very downbeat, particularly at the start. We had a big sell-off on the back of the jobs report, as we spoke about earlier. The problem for gold is that the drumbeat from the central bankers is just going to start turning against it. At some point, whether that's at Jackson Hole or whether it's somewhere else, the central bankers are going to say, listen, we've got a close eye on inflation. And when they do so, we could see that taper tantrum come through again. And, the one thing that we learned from 2013 is that gold can front run the taper tantrum and, be the canary in the coal mine.
What about crypto?
Crypto, different beast altogether. Crypto is not really an inflation hedge just yet. It maybe someday it grows up to be an inflation hedge, but it is not one right now. And I think for cryptocurrencies, it's being driven more still by investor speculation. And I think at the moment, people are very bullish about the odds for a US ETF backed by futures, so an ETC or even an exchange-traded note. But I think, that is ultimately what is driving cryptocurrencies at the moment.
Eddie, what are you looking at in terms of, there's CPI today, and then there's Jackson Hole at the end of the month. Is inflation data still the big one, or inflation expectations and central bank movement still the big one that could hurt the markets?
Yeah, I think so. I think, inflation expectations is a problem here. But actually, for me, PMIs are starting to get really interesting, because PMIs tell us a lot about that shift between the services and goods. And you've been away for a bit, I believe. I've been away for a bit. I think people are starting to take holidays again. They're spending on restaurants. They're spending not so much on keeping their home offices running, right? They're not buying goods. They're spending on services. And I think that is really interesting, because I think that takes some of the pressure off inflation while keeping growth going. So I think that potentially, just maybe the Fed is right that we're starting to see the transitory side of the argument coming through right at this moment in time, that inflation pressures come off, growth continues, employment continues, stocks keep doing well, but, commodities like gold start to sell off.
Eddie, thank you so much. Eddie van der Walt there from Bloomberg MLive team. Now, coming up, infrastructure progress. The U.S. Senate clears the last hurdle for the $500 billion bill. The jobs report posts the biggest gain in a year, sending Treasury yields higher. We discuss the U.S. economy next, and then a little bit later on, we'll also talk about this UN report with its unequivocal fact that human activities have warmed the atmosphere, ocean, and land. This was the major finding from the UN climate report. This is Bloomberg.
sector as a whole? Is it making a better case for itself at the right price at this point?
Most of the big hedge funds, most of the people that have been growing have been delivering very good performance. We have, but so is a number of the peers. You know, it is definitely the hedge fund business is getting more about the large getting larger and generating more performance, being able to hire the best people, thereby generating better performance, thereby getting larger. So when you look at the performance of the largest, say, 20 or 50 hedge funds, the performance has been pretty good over a number of years, and the inflows have been pretty good. You know, this is another quarter of positive inflows for us. I think one of the bits you're seeing at the moment is every client is worried about inflation. When they say they're worried about inflation, what they really mean is, I own a load of bonds, is that going to cause me a problem?
Had an exceptional Q2. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
Another incredibly strong jobs market report.
Very strong report across all metrics.
Across the board, favorable report for the economy.
Leisure and hospitality jobs, those were among the top gainers.
Service sector really shows that this recovery is coming in full force.
This is a critical node for the Fed. It's not just, woo, we just got one big report. It's a month after month.
Maybe this transitory inflation that's supposed to be short-lived is going to be with us a bit longer.
The risks and costs are mounting.
This is not going to be an earlier tightening, but it could be an earlier tapering.
This is going to embed itself, and the Fed risks falling behind the curve.
Very encouraging, very consequential report, but I think the next payrolls report is going to be the decision-making report for the Fed.
The U.S. labor market charged ahead in July with the biggest increase in employment in nearly a year, highlighting optimism about the economy's prospects even as coronavirus concerns resurface. While the unemployment rate dropped to a pandemic low of 5.4%, payrolls climbed by 943,000 last month after upwardly revised increases the prior 2 months. Well, we're now joined by Mark Dowding. He's Chief Investment Officer at Blue Bay Asset Management. Mark, great to have you on the program. Talk to me about the U.S. Is there a real danger that the Fed starts tapering or tightening sooner than expected?
Yeah, so the perspective we've had is that since the start of the year, the economy is going to do very well, and we can see the economy is doing very well, and we're seeing the jobs market bouncing back. We're going to be seeing more of that in the course of the next several months. So we've tended to think that a taper announcement is possible as early as the September Fed meeting. I think in order to get that, you probably need to get another 1 million jobs in terms of the next payroll figure. But we certainly think that we're on that track. And certainly when you look at bond yields and you look at the recent moves in treasuries, I think that of late there's almost been this sense that the market has been somewhat disconnected from the data, because the data has been going along really rather nicely.
So if you look at some of the credit space, Mark, what are you buying right now?
Well, I think in credit, life has actually become a little bit less interesting. I mean, sometimes as an investor, boring can be good. We're seeing a situation where credit markets are largely stable. We'll see more activity in the return to school trade in September, where you see, seasonally speaking, issuance pick up. But if I was going to be picking anything in credit markets that we continue to like and we've liked all year, I'd still be highlighting asset classes like subordinated financial debt, the European bank CoCos. This is a space where we still think that the pricing of credit risk is far too great compared to the risk that investors are truly taking. And also because so many of these assets are callable in nature, they won't be as exposed to a move up in yields that we think is more likely to be occurring in the coming months. And so this is a place where we'd be more inclined to put our own money. And this is where we're most overweight in our multi-asset portfolios.
Mark, what's your take on, we heard from Jens Weidmann that actually he's worried that inflation will rise more than expected for longer than expected, and he's urged the ECB not to do too much because of that. Is there, if you look at, Asia, Europe, and the US, where's the biggest inflation concern?
Well, I think we're seeing an inflation move on a global basis, aren't we? I would sort of highlight that the US is very much at the forefront of this because it's in a position where it's closed its output gap more rapidly. But I do think that we're going to be seeing data, important data on Wednesday out of the US on CPI, where we've now had 3 CPI reports surprise markets to the upside. And it seems like every time CPI is coming out and it's shocking to the upside. Personally, I'm more inclined to believe that underneath the hood, there is more of a sense that wage pressures are building, broader price pressures are building in things like rents and elsewhere. So I would be more inclined to think that with US inflation having gone up, it's going to stay at elevated levels really for the next 18 months now. I think in Europe, it's less of a worry, if I'm truly honest. I think that the comments from Mr. Weidmann this morning has got more to do with the fact that he's anxious that the PEP doesn't become a permanent. I think his words were, the letter P is for pandemic. It's not meant to be a permanent program. And so there is a bit of a battle between the hawks and the doves on the ECB to try and, with the hawks looking to row back some of the monetary accommodation. But the truth of the matter is, even if they reduce their PEP purchases, we will see other asset purchases increase at the same time.
Mark, is there anything right now that actually I don't know whether gold is a canary in the coal mine, whether there's something actually as an asset class that you're looking at to give you an indication of where the markets go in 2-3 months from now?
So I'm not sure that you can read too much from a commodity like gold. I think here this is more something that is telling you about the investors' views on forward-looking sort of inflation trajectory and Fed policy. I think that if I was really looking at markets trying to say where should we be taking a lead, I think the big question for me is having seen sort of a reflation trade in the first quarter of the year and then something of a rejection of that reflation theme over the course of the last few months, are we going to be moving back into the reflation theme? And I think the question that you should be asking yourself as an investor is that we often see at this time of year, what is going to be the big theme that defines the back-to-school trade? And here, I wouldn't have been at all surprised. I'd be putting my own sort of money more towards this sort of thought that we're going to go back towards a more reflationary theme in the course of the next few months as the pandemic fades, as we all hope, as we continue to see economies do well. I'd also be emphasizing, if you look at measures of financial conditions are more accommodative today than they were this time last year. In fact, at any time ever in history, right? So you've got a lot of juice in the economy really driving that sort of reflation idea, I think, as the pandemic starts to fade.
Mark, thank you so much. Mark Dowding there, Chief Investment Officer at Blue Bay Asset Management, joining us this morning. Now, the UN also publishes its most comprehensive report on climate change to date. Coming up, we'll bring you the latest analysis from Bloomberg Green. This is Bloomberg.
situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Beijing is promising a successful Winter Olympics in February. Still, a number of hurdles stand in the way, starting with transporting athletes and delegations. Officials are yet to share quarantine plans, with borders now largely sealed off. Even full vaccination against COVID may not guarantee easier access. There's evidence China's shots offer less protection against the Delta variant. International fans could be limited, but Beijing may allow home crowds capped at 2/3 of venue capacity. For other social distancing rules, organisers will have paid close attention to the Tokyo playbook. We could again, for instance, see winners putting medals around their own necks. Infrastructure is where Beijing can shine. State media says all construction work is on track. But what about the snow? Skiing events will be staged in a desert averaging 8 inches of coverage per year. And China will be relying entirely on artificial flakes. That's raising environmental concerns. And then there's human rights issues. Some are calling for a diplomatic boycott of the Games. Critics, including US lawmakers, want a change in Beijing's stances on Hong Kong and Uyghur Muslims. Pressure is being applied to key sponsors, including Coca-Cola and Visa. China says any rational company will respond with the right judgment, particularly those who have benefited from its breakneck growth. With these games, Beijing has a chance to dazzle the world. Officials are said to want at least 5 gold medals, another challenge for a country historically weak in winter sports.
Well, look at the challenges they're facing the upcoming Beijing Winter Olympics. Now, in the meantime, let's quickly also check on the markets. A lot of the focus, of course, is on asset prices, trying to figure out what the jobs report on Friday meant for Fed tapering, possible Fed tightening. So stocks are pretty much steady. Commodities are really retreating on some of these taper bets in the resurgence in the fast-spreading Delta virus variant, also impacting a lot of growth, for example, growth prospects in Asia. I know China in focus as Goldman Sachs had to lower their forecast. Now, precious metals are selling off gold. I know our Eddie van der Walt was really into gold, touching the lowest since March before pairing some of the losses. Silver also dropping to its lowest since November. Now let's have plenty more, of course, on this climate change. And we're hearing in the last couple of minutes a lot more about the fact that it's unequivocal because of humans that we're in this state. We also heard from the UN Secretary General saying it is code red for mankind. Joining us now to digest the report is Bloomberg Green reporter Akshat Rati. Akshat, you've been working on this almost since the very beginning. You've been covering climate change and green issues for the last 5 to 6 years. What are the key takeaways for you out of this important report?
I think one key takeaway to remember is that when scientists use the word unequivocal, there could not be a more consensus-based view of where things are. It's not like politicians who will come out, say something sure, and then walk back. When scientists put their weight behind a word like unequivocal, we ought to listen. The other big takeaways, and some of the numbers are just astonishing in the report. We can now say that the past decade was hotter than any period in the last 125,000 years. Carbon dioxide levels, which is the main gas that causes warming, is at the highest level in 2 million years. And other gases, such as methane and nitrous oxide, which also contribute to warming, are at a higher level than any time in 800,000 years. We also know from the report that scientists can now link specific weather events to climate change and point to, say, the heat dome in North America and say it's virtually impossible without climate change.
So what does that mean ahead of, Glasgow, COP26 this year, Akshat? Is this going to put a lot more pressure on politicians to do something? Like, you have this, report that every media organization in the world will talk about for the next 2, 3, 5 years. Are we going to get results out of it?
So one thing that happens in the process of producing this report is that 195 member countries of the UN have to agree to a word-by-word analysis of this report, which is a summary. And in that process, they have all seen the science and they are all agreed upon the science that we are discussing today. So that should certainly give them a sense of urgency for why we need to be doing more. The other thing to note from the report is that scientists are now narrowing the scope of the climate impacts that we are likely to see. And the good news is the worst case scenario might not be happening. But the bad news is the best case scenario also might not be happening, which means what governments do and what humans do to change the emissions trajectory is really what's going to determine the next few decades and centuries for all of our planet.
Akshat, thank you so much. That was Bloomberg Green reporter Akshat Rati after this extremely important UN report, as Akshat was saying, one of the most comprehensive reports that we've ever had that could have a serious impact also on Glasgow in November. Coming up, we'll have a full market check. We'll look at the Stock 600 and Treasuries. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
China's factory inflation surges, bonds and commodities sell off, Goldman slashes the nation's growth forecast. Time time for a booster. Anthony Fauci says the vulnerable should get a follow-up COVID jab soon as U.S. cases hit a 6-month high. France introduces its virus health pass today. And Alibaba fires a manager accused of sexually assaulting an employee. The female staff's account goes viral on social media and exposes problems with the culture at China's e-commerce leader. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's look at the markets. There is quite a lot going on. In terms of volatility, there's nothing, of course, to envy the month of June. August has had plenty of volatility, and then we look at Jackson Hole at the end of the month. I would say that volumes are a little bit thinner than usual because a lot of the European traders are probably at the beach somewhere nice if they had their green pass. The thing that we need to watch out for is some of the asset classes after we had some really good data out of the U.S. So stocks are pretty much steady, but commodities are actually retreating. Investors now weighing concerns about a pullback in stimulus and also resurgence in the fast-spreading Delta virus variant. Now, China's economic risks are building in the second half of the year, with growth set to slow as inflation pressures pick up, and that's clouding the outlook for central bank support. At the same time, the spread of the Delta variant is threatening China's growth outlook, with Goldman Sachs downgrading its GDP forecast. Now, for more, Bloomberg's chief Asia economics correspondent, Enda Curran, joins me from Hong Kong. Enda, thank you for joining us. So what's exactly driving the shift in outlook for China's economy?
Well, Francine, we are looking at something of a new dynamic now. We're seeing the Delta variant continue to spread despite a very aggressive push by the authorities to control it. We are seeing exports come off the boil, even on a month-on-month basis, so when you take out the base effect. So remember, exports was a big part of the V-shaped rebound story. And then, as you mentioned, we now have the complication of producer prices in particular rebounding back up to that 9% level. This has been a thorn in the side for the manufacturing sector through the year, who complain about very high input prices and a shortage of key commodities. So it is a complicated outlook. On the flip side, though, even though economists are downgrading their outlook, the overall picture or trajectory is still for bumper growth in and around 8%. I think clearly a lot will depend on whether or not the authorities can control that virus in the near term.
So, Enda, what's the bigger challenge from here, growth or inflation?
Well, I think, look, no doubt inflation has been a problem for the manufacturing sector in particular. I mean, we know that the government has been pushing hard to take the pressure off commodity prices. They've been trying to release stockpiles of core commodities in an effort to take pressure off factories. Policymakers have been worried about the rising costs that small and medium-sized enterprises are facing. So the producer inflation story is definitely a worry, but I think, Francine, the bigger picture here has got to be now what's happening with the growth story, and in particular consumers. Remember, consumers had never fully rebounded to pre-pandemic levels, even though the virus has been under control for so long in China. Spending on goods was doing well, but spending on services was not where it should have been. And you'd have to say now, with these restrictions being put in place to curb the virus spread, that will certainly weigh in the consumer story. And if the consumer story goes off tracks, then it will put broader pressure on China's recovery into the end of the year. So as I say, so much depends on whether or not the authorities can control that virus in the near term. I think that will dictate the trajectory into the end of this year.
Enda, thank you so much. Our Bloomberg chief Asia economics correspondent, Enda Curran. Now, for further analysis, we're also joined by Jonathan Fenby. He's chairman of China Research at TS Lombard. Jonathan, thank you for joining us. When you look at China, when you look at some of the pitfalls and some of the policy mistakes that could come from China, are you worried about the trajectory of Chinese growth because of the Delta variant?
Well, there will be hiccups, as we've got at the moment with the outbreak on the East Coast, which is particularly affecting manufacturing centres there. Undoubtedly, however, I think the trajectory is one of continued pretty healthy growth. We're forecasting between 8 and 9% growth for this year. And of course, there's always a silver lining. The fact that there's been a COVID outbreak in Vietnam and parts of Southeast Asia may mean some supply chain relocation to the mainland of China.
Jonathan, I was looking at some of the, banking house calls, and I have to say, because of the spread of the Delta variant, I see both Goldman Sachs, but also JP Morgan, downgrading growth forecasts to the third quarter and the full year, actually saying that they're expecting more from PBOC. Is PBOC, is there a worry that there will be a policy mistake in China, or are we going to see some kind of slowdown with quick action from central bank?
Well, the action from the central bank will be to help SMEs, smaller businesses, with probably another RRR cut in the later part of this year. The PBOC doesn't want to go into full-scale easing at the moment, and they don't, I think, feel any need to do so. So monetary policy remains neutral, but at the same time, we'll have probably fiscal and infrastructure moves later on in this year to try to boost up the economy, and as Enda was just saying, particularly in order to help consumption, which is the weak part of the China recovery story so far.
So what would boost consumption at this point? I mean, apart from some of the things that PBOC could do, I mean, we're also seeing, which, sitting in London is something that's quite surprising, a lot of officials being reprimanded, mid-local level officials being reprimanded because they couldn't, or because there was not a cap on actually COVID cases. Now, the number of COVID cases in China really pales in comparison to what we're seeing certainly in the UK and in the US. I mean, does that make people wary of spending, or do they feel protected in some way?
People are still pretty wary about spending if the data is anything to go by, and that will continue. And also, the vaccination program in China has been aimed primarily at working age people. Older people haven't got the vaccine very much, and they seem to be pretty loath to go out and spend at all. So spending will remain low. Areas like catering, hospitality are still really in the doldrums.
Jonathan, I want to bring you up to date with the story that's just crossing the Bloomberg terminal. So I know you haven't had much chance to look at it, but China's microchip industry seems to be really feeling the heat from Beijing's regulatory scrutiny. Now, this is a Bloomberg scoop. Investors, are facing more and more Beijing actually tightening a grip on some of the regulation. Is this going to be the story? Scrutiny on e-commerce, scrutiny on technology, scrutiny on microchips. Is this going to be the story from China for 2021, 2022, and beyond?
Well, I haven't been able to see that story yet because I'm speaking to you. But yes, I think that is so. What we've got quite clearly coming out of the suspension of the Ant IPO and then the DD business and everything that followed from that, and the education tutoring clampdown, is that the leadership is using regulation and the regulators increasily to push policies which are there in any case, but perhaps haven't had full teeth as yet. And we'll see that in areas of national security, of self-reliance, let's talk tech particularly, and in social areas, which will include moves to increase minimum wages, get the gig workers better paid, and so on. So yes, I think this regulatory wave that we've seen over the last few months will continue, and it will be directed in part at areas such as microchips and the whole tech area, which the leadership sees as essential to building up China in the way that they're aiming to do so. And that will continue at least until the Communist Party 5-yearly Congress, to be held in the autumn of next year.
Jonathan, thank you so much. Jonathan Fenby there, Chairman of China Research at TS Lombard, joining us this morning. Now, coming up, time for a booster. America's top infectious disease expert, Anthony Fauci, says the vulnerable should get a follow-up COVID jab soon as U.S. cases hit a 6-month high. That story is up next. This is Bloomberg.
the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the beginning, we set out to develop the most effective vaccine against this virus that would last for the longest possible time, help the largest number of people, and be safe. And of course, we had shown a number of those things, but not the piece about how long it may last. And this was the first time we had data that at least showed that 6 months after the initial vaccinations, we're seeing essentially the same level of protection, which is very encouraging. As you said, the Delta strain, as well as a number of other strains that are emerging, pose a set of new threats, and we're also testing against those. So far, what we've seen is that the level of antibodies that we see in our vaccinated patients is adequate to be able to protect against those. But we do think that the rate at which this variant is spreading should require that we think carefully about particularly vulnerable people, older populations, certain health-affected individuals whose immune systems may be weak, that at a minimum we should get ready to be able to offer a third booster shot to those and perhaps a larger number. And that's what we're waiting for the CDC and other health organizations to determine.
And when it comes to the chemistry of that booster, should that be offered, I assume that'll take into account Delta and some of these other variants. Will it be different than the other shots already available, the vaccine that you have already available on the market, because of how the virus has changed?
We are, as a technology developer, creating alternative solutions so that we can let the data indicate what's the best trade-off. Right now, we've shown data that our original vaccine adds so much more antibodies upon a third boost that it is highly protected also against the Delta and other strains. On the other hand, we're also developing variant vaccines in case we need to switch to a more potent, more directed vaccine against those variants. So we're doing the groundwork needed to have choice, and then we're going to work with the governments to be able to make sure we know what's the best solution at a given time. What we can't do in this fight is to basically trail the virus. We need to be ahead of the virus, and to do that, we need to come up with multiple solutions so whatever the virus does, we're able to respond.
When it comes to kids, my kids 8 and under, they're getting ready to go back to school. Vaccines aren't ready. Where is Moderna in terms of progress on a vaccine for 12 and under? And when that comes out, do you imagine it will be offered from 12 all the way down to, infants, or will there be, 12 to 5, for example, a smaller age range, and then younger children come even later?
We're doing the studies from 12 down to 6 months, and as the data becomes available, and we've said this, we hope this will be toward the middle of the fall, so we're working as fast as we possibly can. The only thing we can't accelerate is time itself. We cannot do studies that take 2 months and less than that time, and so some of these things are going to be taking the time it takes. But we're very actively getting our tests done, working with the regulatory authorities and the government public health folks so that we're in locksteps. And as soon as we can get the data, we will have it.
Well, that was the Moderna co-founder Noubar Afeyan speaking to Bloomberg's Emily Chang. Now, for more on the spread of the Delta variant, our senior pharmaceutical analyst at Bloomberg Intelligence, Sam Fazeli, joins us. Sam, we also have news that actually the EU is now reviewing whether to let in Americans. What kind of data are they looking at? Is it the number of COVID cases plus the fact that there's still quite a lot of unvaccinated citizens in certain states?
Yeah, good morning, Francine. You've actually answered the question. It is a combination of those two, I presume. There isn't really much else to look at apart from perhaps emergence of new variants or anything, which is what the UK did, but it was worrying about, or not new necessarily, worrying about French travelers until today. But it's a combination of some states have relatively low vaccination rates, and also there is a big Delta variant. I think the point being, Francine, that they're trying to avoid anyone who's infected to come over, which just seeds another infection round. So I really don't know why they worry so much about infection rates.
So, Sam, are we going to see, travel? I don't know whether you call it travel bans, but how difficult is it to travel at the moment? You could go to, I don't know, Greece, Italy, France, maybe come back to the US or the UK and have to quarantine. Is it the same true the other way around?
Yeah, well, I mean, I think the US has continued to keep its, if you want to call it a ban on traveling by non-citizens and residents from other countries into the US. I'm thinking about wanting to go and visit my colleagues and co-workers in the US, and I'm not quite sure whether I'd be able to do it because I'm not a US citizen or green card holder. So, but currently US folks can come over here and travel without any quarantine. So there's this incongruence in the travel rules, and I don't think the US ever reciprocated the opening of its borders to non-citizens.
What's your take on a third booster shot, Sam? Do vulnerable people need it, and do others need it before emerging markets?
Yeah, so Francine, putting aside the very real and serious conversation about whether we should even be contemplating a booster dose in the West when there are so many countries that do not have any access or very low access to any vaccine, I think one of the critical things that we have to keep in mind is that the trials, as I think Nubar referred to from Moderna, the trials were conducted based on some assumptions with 2 doses, and now we might be finding out that perhaps these schedules should have been 3 doses to start with. You just couldn't have done it any other way, as suggested. You can't speed time up. So we might find out that this is a vaccine that requires at least 1 more dose. I'm not sure whether we need more, but certainly we might find that we need at least 1 more dose.
All right, Sam, thank you so much. Sam Fazeli, they're a senior pharmaceutical analyst at Bloomberg Intelligence. Now, we're also getting some breaking news out of Victura. This is the asthma company, or asthma, actually pharmaceutical company that, for example, Philip Morris was trying to buy. A UK takeover panel is now announcing an auction procedure for Victura. Of course, Philip Morris not being the only one interested in Victura. Now, let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. TikTok owner ByteDance is reportedly reviewing plans to list in Hong Kong by early next year, despite the widening Chinese tech crackdown. The Financial Times says the listing may take place either next quarter or in early 2020. It says ByteDance has been working on addressing data security concerns raised by Chinese regulators. Virgin Atlantic is reportedly considering a public offering right here in London. Sources say executives have been holding discussions with bankers and potential investors and could announce the IPO plans within the coming months. The decision would mark the first public opportunity to buy shares in billionaire Richard Branson's flagship carrier. Saudi Aramco's profit rose to $25.5 billion in the second quarter, the highest since 2018. Free cash flow rose to $22.6 billion, above the state-controlled company's dividend for the first time since the start of the pandemic. Aramco's the latest big oil giant to post bumper earnings boosted by the recovery in prices. The company says it is positive about the second half. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, coming up, Alibaba fallout. The e-commerce giant fires a manager accused of rape after an account of the ordeal goes viral. We'll bring you the full story next. This is Bloomberg.
grow the health business.
After the crisis of COVID-19, everybody is very concerned about health, in particular when it comes to the question of how do you get very fast access to the health system, how do you have a very good health coverage given that illnesses have increased, pandemic signals have increased, and certainly longevity is still increasing. And so AXA as an insurer can really help to gain access to the system, to find the best doctor possible, and to help the patients as quickly as possible. And we see that this is very much on the rise.
How does the spread of Delta, especially in the U.S., and just the threat of more variants, how does that complicate and impact your outlook?
It is clear that in the very short term, we are all very confident.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Alibaba has fired the manager accused of rape, moving to contain the fallout after an employee's account of her ordeal went viral on social media. The incident exposed problems with the culture at China's e-commerce giant. Well, our China reporter Lucille Liu is in Beijing for us. Lucille, I mean, this is an absolutely horrendous story. Walk us through the timeline of the events.
Yes, hi, Francine. So we came, and the public came to know about this really over the weekend after this post by the female employee involved went viral. She alleged that this incident happened almost 2 weeks ago and that she was pressured to drink alcohol on a work trip and then allegedly sexually assaulted by a client as well as her boss. Of course, in the aftermath, Alibaba's CEO has come out and said that the incident unearthed these sort of systemic challenges to the company's mechanisms because of how it's handled initially.
So what are we watching for next, Lucille?
We know that the case is under police investigation, so we are watching for the results. We're also watching what's happening on Chinese social media, where a lot of people have taken to the internet to discuss workplace culture as well as people's responsibilities when they witness something similar happening.
So what does this mean for China's Me Too movement?
So China's Me Too movement hasn't really taken hold the same way it has in some other countries. It came to prominence about 3 years ago. We've seen a lot of high-profile cases since then, but most of these cases have been taken individually and presented individually rather than a part of a larger movement. And of course, the hashtag is not something we see very often on China's social media.
Lucille, does it actually lead to, a change? I don't know if it's a change in culture or, much more of an awareness compared to what you've done in the past. Will this be a landmark case?
Yeah, I mean, Alibaba is certainly a household name here. And just a few weeks ago, we also had another very high-profile case with a celebrity, Chris Wu, who was detained on suspicion of rape. And so these cases in very close proximity have kicked off this conversation. But again, we haven't seen so many convictions and consequences coming out of these cases.
All right, Lucille, thanks so much. Our reporter on the ground there, Lucille Liu in Beijing. Now, in the meantime, let's also look at what the markets are telling us or what the markets are looking at. And stocks are pretty much steady. If you look at U.S. futures, they're also steady. Commodities tumbling as investors weighing concerns about a pullback in stimulus and a resurgence in the fast-spreading Delta virus variant. I'm looking at precious metals actually selling off. Gold touching the lowest since March before pairing losses. Silver dropping to its lowest since November as well. So we'll have plenty more, of course, on that. The big one was the strong U.S. payroll data on Friday, which really raised the prospect of higher rates in the U.S., which would make precious metals and less attractive relative to other assets. Well, Bloomberg Surveillance Early Edition continues in the next hour. I think Matt Miller is off, so we'll be joined by Kaylee Lyons in New York and our Danny Berger here in London. We have a full checkup of the markets. So we'll, of course, look at the CPI data in the U.S. a little bit later, and this big climate change report that also came out about 55 minutes ago. We'll have you covered on all those fronts. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Let's be clear, this is a very strong report across all metrics. There's very little that you can point to here that's disappointing.
I think in some sectors we're definitely going to need to see higher wage growth for people to come back to work. But I think where we're headed right now, I mean, all signs are incrementally going in a good, positive direction.
What is indisputable now is this. The Biden plan is working. The Biden plan produces results, and the Biden plan is moving the country forward.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, August 9th. Our top stories today. The U.S. Senate is one step closer to passing the infrastructure bill. A final vote could take place as early as today. Economic risks rising in China. Inflation pressures pick up while growth is forecast to slow down. And flash crash, gold recovers after prices drop $60 in a matter of minutes. Well, I'm Francine Lacqua here in London. Danny Berger with me in London. Kay Lyons in New York. It's also Kaylee's birthday, but we'll deal with that a little bit later. Matt Miller actually off today. I know there's quite a lot on the markets, Kaylee, because after that really blowout U.S. jobs number on Friday, asset prices are now trying to figure out what it means for tapering or even tightening.
Yeah, that's absolutely right, Francine. And I have to say, having you back with us is the best birthday present I should possibly receive. We missed you so very much. As for what everybody missed in the Asian session overnight, I would note Japanese markets were closed for a holiday, but other than that, it was broadly higher, including in Hong Kong and in China. Chip makers, though, both in Hong Kong and listed in Shanghai, were under a bit of pressure after state media talked about regulators cracking down on chip speculation. Aside from the chips, though, we did see the CSI 300 up about 1.3%, even in the face of this inflation data we got overnight. Factory prices up 9%. Core consumer prices jumping the most in 18 months. So you're getting higher inflation at the same time the Delta variant is threatening growth prospects. And we saw Goldman Sachs downgrading its forecast for Chinese growth as a result of that. After all that data, I should say, we did see some movement in the Chinese bond market, up as much as 4 basis points. Right now, that 10-year yield at 2.86%. And then a lot of action as well in the commodity complex. On the one hand, you have iron ore futures in Singapore down more than 4% as signs that China's attempts to crack down on steelmaker production is indeed happening and waning demand. And then, of course, at the start of the Asian session, we saw a big flash crash in some of the precious metals. Gold down as much as 4%, silver as much as 7%, though we are off those levels now. Gold futures down just about 0.8%. Here in the U.S., of course, we are coming off that upside surprise on payrolls on Friday. And after that, as traders digest it, we are seeing futures a touch softer, down about 0.2 on S&P 500 E-minis ahead of the opening bell here in the U.S. And then the 10-year yield, of course, coming off its biggest weekly increase. We've seen the only increase we've seen since June, in fact, on a weekly basis, but we're ticking just a basis point lower today. Sitting at 1.29%. The dollar is fractionally stronger. A lot of the commodity currencies under pressure in the G10 space today, and that is not just to do with gold and silver, but also oil. Oil coming off of its worst week since October, and the loss is continuing in a big way this morning, Danny. We're down 4% on WTI futures, now trading with a 65 handle for a barrel of crude, Danny.
And Kaylee, that oil loss clearly having an impact on these European markets. Specifically, I direct your attention to the FTSE 100. UK stocks down 0.2%. A lot of oil majors live there. So if you're going to have any weakness, that's where it's going to show through. Otherwise, a pretty soggy day here in the European session, mostly down or flat. The one exception being Italy, up 0.3%, clearly still basking in the glory of just having Francine Lacqua visit the country. So that's the one outperformer. But really, we are seeing a lot of tech outperform. So some of those tech names doing well in Italy. That means at a headline index, the stock 600 basically unchanged, searching for direction so far this morning. Now, the 10-year German bond yield as well as the euro dollar, this is really dictated by the jobs number we had on Friday. A stronger dollar, yields moving up a little bit in the U.S. That really is what's impacting these two assets, though Jens Weidmann of the ECB did say that inflation to the upside is the risk that we should be pricing in, but really he is the lone hawk among the doves. So that not getting priced in too much at the moment. So your euro dollar at 117.55. Finally, Francine, Deliveroo, the big outperformer, the best performer on the stock 600 today, up nearly 10%. So this is a food delivery app in London, based in London rather, a German food delivery app, Delivery Hero, taking a 5% stake. I think the most fascinating thing about this story, Francine, is the staying power of delivery apps. It's really sticky. People are still at home delivering food, even though restaurants are open now.
I mean, I feel like first of all, I spent my weight. I ate my weight in gelato in Italy, and also spent probably like 2 months check in gelato. And then I came back and ordered through Deliveroo because now you can get groceries. So, of course, it's a game changer when you come back home after a trip. We also have the big take. Danny, I love this story. It's basically, where's Bill Huang? He's in New Jersey, apparently. So
in New Jersey?
In New Jersey. It's a great story. It just dropped.
Okay. I'm sure ordering a lot of delivery food.
I mean, probably incognito.
Exactly.
Look at what else is ahead this week. Now, starting today, fully vaccinated U.S. residents will be allowed into Canada for non-essential travel. Tomorrow, Cleveland Fed President Loretta Mester discusses inflation risks at a virtual event. U.S. inflation also in focus on Wednesday as we get CPI data. On Thursday, OPEC publishes its latest monthly oil market report. Now, the $550 billion infrastructure bill has cleared its last procedural hurdle in the U.S. Senate. A vote on final passage could take place as soon as today. Let's get straight to Anne-Marie Hordern, Bloomberg Washington correspondent, who joins us from our D.C. bureau. Anne-Marie, I'm excited to see you. I'm also excited that we may be closer to a resolution on the infrastructure bill.
Yeah, we certainly are, Francine. Senators working through the weekend, passing through some of these procedural hurdles, which sets up a final vote on this legislation. Potentially, we could see it today. They convene at noon, so potentially later into this evening. Or, if worse comes to worse, it'll be tomorrow, because there are some amendments that remain elusive that they have to get to. One of them is regarding cryptocurrency, and that's really about how much of the industry are you going to go after in terms of regulatory requirements. There's two different amendments circulating on that front, and then another regarding COVID bills. But the mood of the Senate is that this is likely going to pass, and then what comes next is going to be very interesting, and that is the Democrats setting up a budget resolution to prepare for the reconciliation bill they plan on hammering out this September.
So is that the timeline that, Anne-Marie, we won't see any any progress on the trillions of dollars in human infrastructure, social spending until the fall?
It'll be a framework that we'll see this week, and then senators are out of here and they're going on holiday for their August recess. And then when it comes back in September, that is really when we're going to see, Kaylee, those details really start to percolate on what is going in this $3.5 trillion reconciliation package, Democrat-only package. And what already we are starting to see in Congress is that it is going to be a contentious autumn as we see the two factions of the Democrat Party really battle out how much should go into this and how much spending they're willing to take.
Anne-Marie, thanks so much. Our Anne-Marie Hordern there over in Washington, D.C. Now, China's economic risks are building. Growth set to slow and inflation pressure is actually picking up. Both Goldman Sachs and J.P. Morgan have downgraded their growth forecast given the spread of the Delta variant. Well, let's get more with our Bloomberg Chief Asia economics correspondent, Enda Curran. So, Enda, first of all, what's driving this shift in outlook for China's economy, and what does it mean for central banks?
Well, we're seeing a new dynamic for China's economy now, Francine. The Delta variant continues to spread, and the authorities are struggling to contain it right now. That, of course, will have an impact on consumer spending. At the same time, of course, we're seeing exports slow down. Exports have been a key part of China's V-shaped rebound. And now we're seeing producer prices are factoring inflation head higher again, back to 9%. That's a complication and will limit what the central bank can do to support the economy. So when you take it all together, economists are downgrading their forecasts. They're not yet calling a hard landing or anything like that for China, but it certainly is a different picture for the second half of the year compared to what it was as recently as, say, 2 months ago.
And given the data you're pointing out, what's more of a concern for China? Is it inflation or is it growth?
Well, I think obviously producer prices have been a key concern for the government this year. Factories have been complaining about very high commodity prices and, of course, a shortage of inputs, key inputs, everything from plastic through to screws for the products that they make. But at the same time, the authorities will take a bigger picture on this, and they will look at what's happening to the overall economy, and that's growth. And I think in particular, they'll want to see what's happening with the consumer as they impose these tough restrictions to try and curb the spread of the Delta virus. If that does hurt the consumption story, that's a bigger threat to the economy, I think, than the producer price story. So everything depends on how the virus plays out from here.
All right, thank you so much for joining us, Bloomberg's Chief Asia Economics Correspondent, Enda Curran. Now, gold is recovering this morning after a flash crash that saw prices drop $60 in minutes. Investors are concerned that the Fed may soon start paring back its monetary stimulus. Bloomberg MLive commodity strategist Eddie Vanderwalt joins us now. So, Eddie, was this just Asia catching up to the payrolls report on Friday?
There's a little bit of that going on. I also think that there was just probably some gold selling going on the weekend, and we are only really seeing that register on COMEX early doors. Really, that payrolls report you mentioned, that was the worst of all worlds for gold, because on the one hand, we had a bumper reading. The economy is doing well, jobs growth is picking up. The Fed will like that. That will give them an opportunity to raise. On the other hand, wage inflation beat expectations, and that is another factor that will really worry the gold bulls, because again, that forces the Fed's hands in perhaps raising rates.
Eddie, it's not just precious commodities that are taking a dive today. Oil also under a lot of pressure, under $70 a barrel for both WTI and crude. What are the main drivers dragging oil lower today?
The oil market really under pressure, as you say. I think at one point when I was checking, down 3% or more on WTI and on Brent. And really, I think there's a different set of drivers here. I think for oil, the problem is the Delta variant, the spread of the Delta variant, the pace of the Delta variant. They're worried about, particularly more lockdowns in China. And, China's shown that they want to be aggressive on curbing this breakout. And that could really curb oil demand, which will put prices under significant pressure.
All right, Bloomberg MLive strategist Eddie Vanderwalt, thank you so much. And Eddie, there just talking about the decline we're seeing in oil, and that is leading to some declines in energy stocks in pre-market trading here in the U.S. Your biggest large cap underperformer, Marathon Oil, down the better part of 4% in early hours. This stock already off about 16% from its peak just last month. To the upside, though, maybe some potential deal action or at least talks. Invitae Group up about 9% in early hours on report. Exact Sciences has approached the company about a possible merger. Those talks aren't active. No guarantee of a deal, but still investors are bidding up that stock. And another stock getting bid up is, of course, by the Reddit traders. We have to talk about what's going on StockTwits and on other forums. Future FinTech Group, it is a blockchain company. It is up about 14.4% in early hours. This is a very small company, not even a $200 million market cap, Francine, but nonetheless, retail traders seem to like it.
Oh, I like Future FinTech Group. We'll have plenty more on that shortly as well. Kaylee, coming up, Freddie Late, Latitude Investment Founder and Chief Investment Officer. And then a little bit later, we'll be speaking to Louis Lukens. He's Signum Global Advisor, Senior Partner. I know he'll have a thing or two to say about infrastructure and what the next steps are. When could actually President Biden sign this? That's the million-dollar question the market is waiting for. This is Bloomberg.
less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Surveillance Early Edition. I'm Danny Berger with Francine Lacqua in London and Kaylee Lyons in New York. Now, the jobs number on Friday really changing the picture for what it means with what you're going to do with yield. So I'm looking at the U.S. 10-year real yield, and I also want to welcome our radio listeners as well. I know you can't see this chart, but let me explain it to you. It is the weekly movement in the U.S. 10-year real yield. And for the past 7 weeks, that real yield has declined. But after getting that blowout jobs number on Friday, it all of a sudden perked up the real yield, rising 11 basis points for the entirety of the week. That is the biggest weekly gain since back here around the beginning of the year in February. So again, for our radio listeners, this was a really big change of what we saw in the real yield and went counter to the trend that has building over the past month or so. So the question that this chart really raises is, do we have to approach markets differently now? Now that we have this bigger jobs number, how much of a regime shift really was that jobs number that was much stronger than what was expected? Well, let's give that question to our next guest. It's Freddie Late, founder and CIO of Latitude Investment. Freddie, first off, thanks so much for joining us today. So this perk up in real yields and the jobs number, does this to you indicate a regime shift in this market?
Good morning, Danny. I don't see it as necessarily a regime shift, because I think most of the information we've been getting from the central banks and from the markets over the last 3 to 6 months has been that we should be moving towards a tapering, maybe towards the end of this year, and a normalization over the next few years, according to the dot plots and the language around it. So we should be expecting that anyway. What this does is it firms up that signal. There is still an argument that, next year may be very difficult for the economy and real yields could stay low. But if we see an improvement, as we saw in the jobs number, coming through other data points, it firms up that signal that we will engage with tapering in the near future.
And then you look at gold and you kind of think, well, what exactly is happening with gold? Is it the canary in the coal mine?
Absolutely. Well, gold and real yields, if you compare a chart of 10-year real yields with gold, they're very, very similar trades. And I think what's been happening is gold has been rolling over ahead of the TIPS yield and is potentially indicating further weakness in the TIPS yield, i.e. a rising real yield in America, which I think would be a good sign from an economic perspective. But it is really the price, real or nominal yields, that is being used to price equity markets, infrastructure assets, housing markets, etc. And so it could cause a reversal of some of the asset price inflation we've seen. So it's definitely something to watch for markets as a whole. You're right.
Freddie, to go back to bonds, we have a great opinion piece out on the terminal this morning from Bill Dudley, the former New York Fed president. And in part, he says, quote, quantitative easing has sustained the bull market in bonds beyond what is consistent with longer-term fundamentals. If the bond market is disconnected from the fundamentals, does the equity market need to pay attention?
Yes and yes. I think the bond market probably is being manipulated, maybe too strong a word, because it's very public what they're doing, but the 10-year yield is not the right price for a sort of free market price for the 10-year yield. It is due to excessive central bank buying. Equity markets compared to bonds are not as extreme, but I do believe that if bond markets were allowed to get to where Bill Dudley or I may suggest they would be under normal circumstances, given the strong level of growth, strong level of money supply and demand, you may see lower equity markets still. So I think there's something in the price for equities judging a little bit of the risk of rate rises, but not a lot. And I think if they do move sharply, you will see further weakness in the equity markets.
Freddie, you'll have to forgive me because I now want to take you into the world of derivatives and specifically what we're seeing around FX volatility. At the moment, the markets, when it comes to the yen, are pricing more volatility around the next jobs number when it comes to the August report versus Jackson Hole. Do you think that's correct? Do you think that there should be a bigger risk premium attached with Jackson Hole versus the jobs data?
It's a very good question. I think FX volatility, as an aside, will continue to rise dramatically from a fundamental perspective over the next 3 to 6 months, as I think that's probably going to be the outlet for traders these days. It's less manipulated by central banks, things like that. In terms of which matters more, it's quite circular. You know, the Fed will take a read from the next jobs number. I do think that at Jackson Hole, it's unlikely we see a bombshell tapering announcement, but we will see conversation about it. Therefore, I suppose the argument is it's more predictable, whereas the next job number, high skew upwards or high skew downwards, could cause major volatility. So it's probably right that the markets are pricing in excessive volatility due to the uncertainty led by the jobs market.
Freddie, how much does that have to do also with low volumes? And actually, when are you expecting the Fed to start tapering?
Well, I don't know, but it feels like the end of this year, you know, Q4, Q1 would be my guess, but judging by the underlying economic scenario, I mean, I think they could already be doing it, frankly, from an economic perspective. Right. But there's another couple of things to say. Firstly, well, the main one is this. The main one is that fiscal spending is out of control. The infrastructure bill is probably going to get passed today in the States. Fiscal spending across Europe and the UK, it's out of control. And the central banks are the only buyers of that debt at present. People are not willing to fund governments at negative real yields, which is why quantitative easing may have to carry on for longer than we'd like to believe.
Freddie, thank you so much. I thought you were going to make us all millionaires and we could go home with your huge Fed call. So we'll get you back on to make to ask you again to predict it. Freddie Late, founder and chief investment officer of Latitude Investment. Now, coming up a little bit later today, we'll also speak with the former New York Fed president, Bill Dudley, about his latest Bloomberg opinion column. That's at 10:30 a.m. in New York, 3:30 p.m. in London, and this is Bloomberg.
Exceptional Q2. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
Only about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
Communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackwood, Danny Berger in London, Kaylee Lyons in New York. Now let's get straight to the Bloomberg. First word news, and a new report from the world's top climate scientists sees no end to rising temperatures before 2050. The assessment comes from the UN's Intergovernmental Panel on Climate Change. It says the planet will keep warming unless there are drastic moves to eliminate greenhouse gas pollution. Now, the UN Secretary General calls the report a code red for humanity. Alibaba has fired a manager accused of rape. Well, China's largest e-commerce company is trying to contain the fallout after an employee's account of her ordeal went viral. The story has ignited debate about rampant sexism in China's tech industry. Warren Buffett's Berkshire Hathaway is reaping the benefits of the U.S. recovery. Now the conglomerate's collection of manufacturers and retailers bounced back in the second quarter. That group of businesses posted its second highest quarterly profit in data going back to the middle of 2009. Overall, Berkshire's profit rose 21%. And ESPN reports that soccer superstar Lionel Messi has already reached a deal with Paris Saint-Germain. Messi said goodbye to his long-term club, Barcelona, in an very emotional news conference. The club is not renewing Messi's contract because of financial problems. He's widely regarded as the best player of his generation. I mean, I even watched the press conference. I'm not, a huge Barcelona fan, but I was kind of tearful because he gave so much to the club and they gave so much back to him.
Yeah, it's so true. I mean, it was really emotional, but I have to say the amount that PSG must be paying for him, not only do they have to match his pay, but they also have to buy out the Barcelona contract. We're talking about hundreds of millions of euros here.
Yeah, I have to say, Danny, I don't really pay much attention to European soccer or football, whatever you want to call it, here in the U.S. But even I know who Lionel Messi is and what he means for the sport. And this is definitely a saga that a lot of people here in the U.S. are also watching as this plays out in Europe, Francine.
Yeah, I can tell you for free that actually at 34 years old, he's considered an oldie in football terms. Coming up next, Louis Lukens, Signum Global Advisors senior partner. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y-12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance, and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London Kaylee Lyons in New York, and Matt Miller is off today. Now, if you look at the markets, every asset class, Danny, is trying to figure out how they should interpret the jobs data on Friday, what it means for the Fed, and we're talking about tapering, of course, before tightening, but there's still that question mark on how soon it can come.
Exactly. And all of that movement meant that commodities absolutely falling out of bed, whether you look at gold, silver, or oil as well. But of course, Francine, a big part of it, and we talked with Andy Vanderwall earlier today, is just the liquidity gap that's in the market. And this is, of course, something you asked Freddie Late as well.
Yeah, one of the things that we need to try and figure out is, of course, what asset class will come out trumped and whether there is something more sinister out there. Kaylee, what are you seeing in the markets?
Well, in Europe, Francine, it's interesting. The Stock 600 did hit a record high again earlier today, but right now that index is essentially flat. Right now, actually down not even a single point. And here in the U.S., as we assess that jobs data, an upside surprise on Friday, we are seeing futures pointing to a lower open in about 4 hours' time, down about 0.2% on S&P 500 futures. In the bond market, we did see yields rise last week on a weekly basis. That is the first time that has happened since back in June, though we are inching just lower by about a basis point this morning, the 10-year yield sitting at 1.28%. And as Danny was talking about, commodities under some pretty immense pressure, specifically when it comes to oil. Already saw its worst week last week since October, and now those losses are continuing, and we're down more than 4 percentage points on WTI, trading at around $65.41 a barrel. Concerns about the Delta variant, really the story here, and what is going to do to oil demand. And no surprise, with those declines in oil, looks like energy will be the big underperformer on a sector basis come the opening bell. The Energy Select Sector SPDR ETF down about 2% in pre-market trading, and your biggest laggards on a single name basis in early hours are energy companies. Marathon Oil down about 4%, as is Occidental Petroleum, and even Apache down the better part of 3%, Danny.
Kaylee, I want to stick in the U.S. because after Friday's job report, the question is, what are the next catalysts that move the market? And certainly inflation is going to be in focus with CPI and PPI this week, as well as the infrastructure bill. Well, to really give us a view of what inflation has meant for these markets and economists, I am looking at the City Surprise Index specifically for inflation. And I want to welcome all of our radio listeners as well. I know you can't see this chart, but essentially what it shows is it moves higher if inflation is surprising to the upside and moves lower if it's surprising to the downside. Well, again, for the benefit of our radio audience, at the very past couple months, and indeed the last couple readings, an outrageous reading on the surprise index to the upside. It's about 86. And to give you a frame of reference, in years past, the highest figure was about 42 in 2008. So we've seen just these repeatedly big surprises of inflation to the upside. Will we continue to get that? What will this week's numbers bring? And of course, Francine, does the passing, or very much so likely passing, of a more than $500 billion infrastructure plan, does that continue to drive these inflation numbers even higher?
Yeah, and we have stories, of course, of also the lack of raw material to build some of this infrastructure. Now to Washington, as Danny was saying, a vote in the U.S. Senate on that $550 billion infrastructure package could come as soon as today. Now, the legislation has broad bipartisan support, but amendments on the table remain uncertain. So to talk about this, we're joined by Lou Lukens. He's Signum Global Advisors senior partner. Lou, I feel like this is a big moment because we've been talking about the infrastructure package for about 4 or 5 months. I feel like this is, the defining moment for the Biden administration. What are you expecting?
Well, Francine, we've been talking about this for years. Remember during the Trump administration, every week seemed to be infrastructure week. So I think this is a huge moment for the Biden administration. President Biden and his team have worked really closely and really hard with Senate leadership and House leadership to try to craft a package that can get bipartisan support. And it's all coming together. Finally, it's been a rough road, but it's happening. And I think by later tonight or early tomorrow morning, this bipartisan infrastructure bill will pass in the Senate. The question is, then it goes to the House. The House is on recess until September 20th. So not much will happen until the end of September. And then the House has to take it up and either pass it as it is or try to reconcile it with their own vision of infrastructure. My guess is that they'll pass it pretty close to what it is to give Joe Biden this bipartisan win before the end of the fiscal year.
Yeah, we understand that Schumer also plans to turn quickly to passing a budget resolution, right? That will then set the stage for everything else. How quickly can this all be done? Well,
Schumer will try to get the budget resolution passed this week. And the senators, this will be Democrats only, right? But the 50 Democratic senators, as well as the rest of the chamber, want to go on vacation. They want to get back to their districts this weekend. So there's a bit of time pressure to get this done. Schumer will get this done this week, and then, again, it goes over to the House where nothing much will happen. The challenge, the real challenge for Nancy Pelosi is that this is a $3.5 trillion budget resolution.
Right.
We don't think the second reconciliation piece will come in that high because there's a lot of pressure from the more moderate Democrats to bring down the price tag. And they'll have to walk a fine line, the leadership will, between keeping the progressives happy
Right.
with lots of big items and keeping the moderates happy.
So, Lou, as you said, that reconciliation part will be Democratic only. It will be partisan. Does that cancel out the bipartisan? Does it count as compromise if you're compromising on some things and then just shoving through everything else you wanted in the first place?
Well, I mean, the Democrats will argue that this is what Joe Biden was elected to do and this is their mandate. The Republicans will argue, certainly, that the Democrats are going on this crazy spending spree without any Republican support. I think the fact that they will do a budget reconciliation piece does not detract from the bipartisan nature of this bipartisan bill, which is going to get passed later tonight.
So let's talk about the political capital it gives the Biden administration. Does this make it easier to get some of his other initiatives through Congress?
Well, no. I mean, I think, this will probably be the only bipartisan package that gets done this year. Everything else will be done by the Democrats using the budget reconciliation process. So I don't think that the passage of this bipartisan infrastructure bill necessarily makes other legislation easier. I think the Republicans will feel they've done their bit to sort of promote bipartisan governance, and they're done now. And they will say anything else beyond this, whether it's voting rights or immigration reform or more spending, they won't agree with that.
Lou, when it comes to some of the details of this infrastructure bill, Allison Schrager of Bloomberg Opinion writes that a lot of the benefit is undone by about 60 pages worth of Buy American, Build American. And she argues that our economy, it's more global, that focusing on American manufacturers means that often we'll also have to pay for higher prices. Do you see this as an issue as well?
Well, Joe Biden has been very clear that he's focused on Buy America and restoring American manufacturing. And I think the reason that these items are in this bill is to promote that and to reinforce that. Yes, it will certainly make some of the projects more expensive, but there's still a lot of money that's going to be flowing into the U.S. economy over the next 5 years or so. I mean, we think at Signum probably a total of $2.5 to $3 trillion in infrastructure spending when this is all said and done. And it's going to be an incredible boost, I think, to the American economy.
And inflation, Lou, should we really worry about inflation? Are we measuring the kind of inflation that we'll get from the package right?
Well, it's hard to say because the package will be spread out over 5 to 8 years, and so I think what we're seeing now, this sort of transitory inflation, is not is different from what if there's going to be long-term inflation that comes out of the spending bill. I think that the spending bill, the infrastructure spending bill, is going to take a while to get off the ground. There are certainly some shovel-ready projects around the country, but a lot of this money is going to take a while to trickle into the economy. So I think it's too early to say whether there'll be inflationary results from this.
All right. Thank you so much for joining us today. Lou Lukens, their senior partner at Signum Global Advisors. Now, coming up, time for a booster. Will America's top infectious disease expert, Anthony Fauci, says the vulnerable should get a follow-up COVID jab soon. That story is next. This is Bloomberg.
As escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo do Milton Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem pros amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We do think that the rate at which this variant is spreading should require that we think carefully about particularly vulnerable people, older populations, certain health-affected individuals whose immune systems may be weak, that at a minimum we should get ready to be able to offer a third booster shot to those and perhaps a larger number, and that's what we're waiting for the CDC and other health organizations to determine.
We need to look at them in a different light than the durability for a normal person, which means that we will almost certainly be boosting those people before we boost the general population that's been vaccinated. And we should be doing that reasonably soon.
That was Moderna co-founder Noubar Afeyan and America's top infectious disease expert Anthony Fauci speaking about COVID-19 booster shots. And sticking with the virus, the EU is likely to discuss reintroducing travel restrictions on visitors from the U.S. as coronavirus case numbers rise again. And from today, people in France will now need to show a health pass to enjoy activities like going to a cafe or traveling on public transportation. Let's get more on this with Sam Fazeli, senior pharmaceuticals analyst for Bloomberg Intelligence. So Sam, tackling the booster shot of this equation first, is giving people a third shot of an existing vaccine enough, or do the vaccines themselves need to be recalibrated to combat these variants?
Yeah, good morning. I mean, that's an excellent question. It seems so far that the data that they've published, Pfizer said it, and so has Moderna, I think, although Moderna did try a vaccine kind of based on the beta variant sequence. And they found that they are pretty much the same in terms of their ability to neutralize any variant once you give a third boost of exactly the same vaccine that we've just had. So it doesn't look like we need to necessarily go down that route, but there is some nuances that still have to be worked out, I think.
I mean, I'm so exhausted, Sam, of all these variants. Like, when do we find out, when the variants come up, how quickly are we to analyze if they're more deadly or you can transmit it more? Like, are virologists working round the clock to try and figure out what happens next?
Yep, this is unfortunately, Francine, this is going to be a never, I'm not going to say never ending, but not ending for a while story, in that the virus doesn't wait for us. It's got certain capabilities to mutate just randomly on roughly one mutation per 2 weeks is what the estimate is. But then, of course, if you give it lots of people to mutate in, which I think is what we're doing at the minute, then you get a whole population of those. So I think virologists are doing the best they can. The question is, we need more sequencing, which we've said all along, from different countries. And even normal testing has dropped in the U.S.
And I mean, in the U.S., you have rising cases that, as Kaylee mentioned, is causing the EU to look, should we no longer allow U.S. passengers into the country? But Sam, I wonder with these kind of travel curbs, when is it too little, too late? When is the right time to act?
Yes, well, as the United Kingdom has proven and other countries have proven, there probably isn't a particularly right time to act, because even in Europe, where they tried very hard to keep the Delta variant out, it's arrived and it's everywhere, in every country. So the virus finds a way in unless we completely seal ourselves up, which of course some countries have, and those countries will have other issues to deal with as time comes. But if you look at the case counts, the US is already almost twice as much per capita in terms of number of cases. And that crossed the line between Europe and the US around the end of July. So is it too late? I mean, it's not about variants. It's about worrying about importing more cases than the European continent already has.
So, Sam, given the U.S. U.S. case curve in the way that it is going pretty much straight upwards at this point, and the vaccination rate and the number of people who've already had COVID here stateside, is there reason to believe that we could see that starting to turn the other way in the near future?
Yes. So if you look at what happened in the United Kingdom, very different countries, I understand, very different levels of vaccinations. One would hope that the US should be reaching a peak if you simply follow the UK path. Of course, with lower vaccination rates, that's likely to be later, but all these waves do eventually crest. The difference is people need to pay attention to methods of reducing the virus from passing from one person to the other. If they're not going to be doing that in the US, then unfortunately that crest will get later and later and later.
Sam, I was in Italy last week, and from last Friday, you had to show a pass saying that you were vaccinated to dine indoors, for example. I think the same is true for France today. Does that really help people get vaccinated, or is there an initial boost of, let's say, 2 million people wanting to get vaccinated, and then that dies down?
Well, it will eventually die down because there are some people who can't get vaccinated because of the various issues they have, or they're not eligible yet. But there will be some diehards who just won't take the vaccine, and then it will be interesting to see how that pans out. If you look at the number of people protesting in the streets in France, for example, those diehard anti-vaccine folks, which may not all be anti-vaccine, there may be some of those people who are genuinely worried about their rights. So I'm not criticizing them. What I'm saying is, if they are all anti-vaccine, there aren't that many, because you see these events and there aren't that many people there. So maybe, fingers crossed, we can cross that barrier.
All right, Sam, we'll have to also get you back on to talk about kids' vaccines as we're approaching, some will say, the back to school, although it's still 3 weeks away, as I'm sure all small kids like to remind their parents. Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Now, coming up in the next hour, more with Johns Hopkins Bloomberg School of Public Health Vice Dean Joshua Scherfstein. They'll ask him, of course, about COVID-19, some of the rising cases, and travel. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
The financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg.
$1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London. Kaylee Lyons is in New York. Now, billionaire investor Leon Cooperman says the short-term prospects for stocks are rosy, but the long-term outlook remains cloudy.
My long-term concerns are, I think we're kind of borrowing from the future. You know, Laura Tyson's a very distinguished economist. I don't know if she's still listening, but I would say if I lined up 100 economists and asked them what is the potential real growth of the U.S. economy, the response would be centered around 2% real. And that's be a function of labor force growth, which is about 0.5% per annum, and productivity growth, which is about 1.5% per annum. So that determines real growth in any economy. So 2% real. If you're an economic bull, you say 2.5. If you're bear, you say 1.5. Add to that about 2% for inflation. So nominal GDP grows 4%. We have real growth this year of 4 times potential, yet the Fed is holding interest rates near zero. Makes no sense to me. I understand what they're doing and why they're doing it, but I think it's going to have a bad end to it. Secondly, you just referenced it a minute ago. You know, we've already injected into the economy $1 trillion of stimulus in excess of wages lost. Yet they're trying to do another 2 or 3 trillion on top of that. And so, you know, this nation was founded 245 years ago. We had no national debt. 3 years ago, it was about 20 trillion. I think now it's knocking the door at 28 trillion. And it's growing at a rate far in excess of the growth rate of the economy. And when this party ends, basically, it's not going to end well.
Well, that was billionaire investor Leon Cooperman speaking on Bloomberg Wall Street Week. Now let's get straight to Tom Keene, co-anchor of Bloomberg Surveillance, who joins. Tom, I know you want to look about, at employment or unemployment. I also want to ask you about infrastructure.
Well, markets
good morning.
Good morning. Market's sort of quiet, and oil a little bit south, but we're still picking up the pieces from the Friday jobs report. What a marathon that was, with good revisions as well. The regular vanilla unemployment rate really speaks volumes here. I saw this on all sorts of economist research reports. I know J.P. Morgan, Michael Ferroli wrote it up. This is how far back we are to normal. And Francine, it's simple. We're getting there. Not near a 4% unemployment rate, but we're getting there.
Tom, I want to get your take, too, on what we've seen in commodities. Some of the precious metals may be off of session lows, but oil still getting absolutely hammered.
Yeah, well, it's a global feel here, and there's a global slowdown. I think, Kaylee, mostly it comes off of the realization stronger dollar, resilient dollar means weaker EM, and that devolves right away into China, into EM, and that gets you to West Texas Intermediate 65.40.
Tom, when it comes to those unemployment numbers, I know you've been speaking to a lot of your guests, whether the figures capture the modern economy, whether there's been a paradigm shift and we have the sort of tick-tock jobs. What's been the take after this jobs report? Do we trust this data?
We don't say paradigm on Mondays. It's too stressful.
Oh,
but yeah, I get your point. I get your point. It's very paradigmatic. And the answer is it doesn't capture everything. That's why there's 4, 5, 6 flavors of unemployment rate. That's the headline number that we just showed. But all in all, is the American labor economy where it is? Yeah, it's where it is. But what's really important to watch here over the next 60 days is wage dynamics. To me, that's the number one thing. It took me, Francine, the Bentley broke down this morning, and I had to take Lyft. And I'm telling you, getting a car in the morning is tough.
Not the same. Yeah.
It's tough.
It is tough. You're looking very dapper in that linen suit, fitted for the Riviera, maybe in France and Italy,
I got a message.
The economy is booming.
Yeah, I got a message from Pharaoh's people, and they said, look Italian this weekend. So I said, okay.
Okay, perfect. I'm expecting the whole week of Italian looks. Tom Keene, there, co-anchor of Bloomberg Surveillance. Now, we have plenty more coming up today and the rest of the week. This is what we're watching today. First of all about infrastructure. Kaylee, finally closer to some kind of resolution.
Closer, still not there yet, Francine, but maybe we will see a final vote in passage later on today, or in worst case, perhaps tomorrow. It was a long weekend for senators on Capitol Hill, but they voted last night to limit debate on this $550 billion bipartisan package. 18 Republicans joining all 50 Democrats in that. So it does indicate that it has bipartisan support. But the fate of some of the amendments, like the one with new tax rules on cryptocurrency transactions, still kind of left in limbo. So we will look and see if we get any answers on that, and if we actually do get this thing passed, Danny.
Kaylee, I'm looking at something a bit more micro, though, with a macro twist, and that's beyond tech earnings. They're going to report before the bell in the U.S. session. It'll be interesting to see because, of course, they have the vaccine, and in Pfizer's earnings, a large chunk they got from vaccine revenue, so we'll see what that means for beyond tech, but also their analyst questions and commentary during the call, what it looks like in terms of booster shots, what demand looks like globally. I think those are going to be really fascinating questions. So again, Francine, yes, this is an individual company, but it has global implications.
Yeah, what I'm watching is, of course, this climate report. I mean, it was the biggest climate report that ever came out. I think about 200 scientists have been working on it, digesting thousands of studies. The summary makes a pretty, difficult read, actually. It's the first major assessment from the UN-backed intergovernmental plan on climate change, and it's basically that, look, it's human-caused, it's not going to get any better, and they say that the planet will warm by 1.5 Celsius in the next 2 decades without drastic moves. So I don't know whether this will have an impact in the coming days, in the coming weeks, on what we hope to hear in Glasgow for COP26, but certainly that's a very, very big deal. Coming up, Bloomberg surveillance, more is ahead. We'll hear from Bill Lee of Milken and Michael Purves, amongst others. The big take, it's a great story, actually, chasing Bill Hwang after what happened at Credit Suisse. He's in New Jersey. We were talking about it on air. I'm sure they'll also mention it in the next couple of hours. This is Bloomberg.
outside of New York for offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we've really preached the mantra of flexibility. I think we've proven throughout COVID that we could be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history through a flexible work environment. So as we head back for the fall, we've really preached to all of our businesses to lean in and embrace this flexibility and go where the market goes. We're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
Economy, the empty cubicles that you've seen across the country, it has not stopped.
Now it's time to sort of pull back both the fiscal as well as the monetary stimulus.
The Fed's being very clear they want to avoid the taper tantrum.
It's going to take a long time to get it back to a normal level.
We are expecting that the market will end the year lower rather than higher.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get the trading week started from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures up about 1/10 of 1% on the S&P 500, down by 1/10 rather, Tom. There's some real tension this morning. Better news out of America, worse news out of China.
Yeah, I think you nailed it, John, with your first sentence. It is a trading week, and everyone has to reassess. I mean, I'm gold with the volatility this morning and that oil off, but it's really interesting, John, how the recalibration of September is going to happen now.
Really interesting for the debate around inflation as well, Tom.
Yeah.
The jobs report on Friday was a sign that the supply side of the U.S. economy was healing. Then you've got what's happening with China. Let's be clear about this. What is happening in China reintroduces some upside risk to those supply constraints and to inflation as well, Tom. That's a problem.
There's noise. I mean, there's noise in the Pacific Rim. There's noise in the strong dollar. DXY, we're not through to 93. We'll talk about that. But, John, just to me, the bang-up jobs report with a bang-up revision globally means everyone has to reassess, and that's what I saw in the research notes over the weekend.
What I see this morning is reassessing Chinese growth. Lisa, last week it was Nomura, then JP Morgan and Goldman follow over the weekend. It's cut.
Downgrading third quarter GDP as well as full year GDP growth in China. And this comes as we get faster than expected inflation. That was what we got overnight that I thought was most interesting out of China, that you're seeing producer prices as well as consumer prices rising at a faster clip, even as officials try to curb some of those price rises. How much does this lead to a stagflation light or stag light kind of environment? Well, I mean, honestly, this is the fear. How much do higher prices crimp growth in the near term and the long term?
93 seconds into the show?
We're not even 2 minutes in. Let's get to the price action this morning on the S&P 500. The number one question for the Federal Reserve: how much progress did we just make towards substantial progress? We'll get into that in just a moment. We're down 7 on the S&P. We're negative 0.16% on the S&P 500 after putting together a tidy week of gains last week. Into the bond market, where yields were through 130 a little bit earlier on in the session. Last week, the lows, 112.58 on Wednesday, then back through 130.
The bond market's a messy.
128.17 on 10s right now. And euro dollar. Don't think I haven't missed that mention, Tom. Euro dollar 117.61. It would be nice to start this program just without the interruptions. A couple of minutes in.
No, we can't do that.
Tom, we'll do that in a moment, all right? And crude was battered last week.
Yeah.
65.48. Least we're down another 4%.
And this comes in the concern of the Delta variant and what that could potentially mean for global growth. Okay, so today I expected you guys to say it was going to be pretty sleepy because we're not getting any massive economic data. But no, we are getting some massive economic data. That's 10 a.m. I actually am really fascinated to see whether we hit a new record in terms of job openings. It is the U.S. JOLTS job openings data for the month of June. Last month was a record, May, that reading. How much does this indicate that supply friction of workers is not abating? If anything, it's getting worse. And what does that mean, especially as some of the enhanced unemployment benefits roll off in certain states? What is the cause of this, and what will it take to narrow this gap and get workers back into the workforce? And what does it mean for wages? Also today, we're going to be hearing about substantial further progress, perhaps. Atlanta Fed President Raphael Bostic and Richmond Fed President Tom Barkin both speaking at 10 a.m. Raphael Bostic, noon Tom Barkin. The key question really is, how much did the labor market report that we got on Friday really do to further the argument for tapering sooner rather than later? Also, today, just to give you a sense of the progress that we're getting with respect to the vaccinations and the pandemic, Hong Kong is planning to open its borders for the first time since the start of the pandemic to some foreigners, fully vaccinated U.S. residents, as well as from Canada. And also, U.S. residents that are fully vaccinated will be allowed into Canada for the first time starting today. You're starting to see the global borders open up just as the cases start to increase, John. Make sense of it? I can't. However, it does seem like people are plotting an end to the pandemic.
We'll catch up with John Hopkins a little bit later this morning. Lisa, thank you. Let's turn now to Bill Lee, Milken Institute Chief Economist. Bill, let's start right here. How much progress have we just made towards substantial progress at the Federal Reserve?
Everyone's trying to figure out how much pressure there is in that labor market, and those good numbers on Friday really went a long way
to giving a positive picture. One thing that I should point out, and maybe Lisa has already pointed out, is that most of the wage gains that we're worried about really go into the low-wage workers. The Atlanta Wage Tracker has shown that the first quartile is getting all the wage gains, but the fourth quartile, the higher-paid workers, are actually having a very steady set of wage increases, and the job gains are really in those entry-level jobs where they're missing people because people have actually upgraded themselves. So when you actually look at how much progress we've made in the labor market, we've done a lot to restore the hospitality and leisure industry, yes, but those are the low-wage sectors, and they should be getting higher wages. A lot of productivity gains, though, have come about where companies have really eliminated a lot of these jobs, and we're going to find a lot of people not getting jobs. And the Fed is really concerned with not maximum employment, but the maximum extent of employment, and that's where we're going to see the tension at the Fed. The Hawks are going to say a lot of progress has been made, but I think the chair and Lal Brainerd, the possible next chair, is going to be saying, we still have a long way to go to maximize the extent of employment gains.
Bill, you nail the zeitgeist right now. Greg Valliere writes it up in his morning note where nothing else matters but perceived or future wage inflation. And then you go to productivity. Can we observe productivity in real time? Don't we have to wait to see if it happened?
Well, Tom, as you know, it's the hardest thing to measure, especially in the service sector, which is the largest sectors in our economy. But one thing to keep in mind is that the federal government has decided to balance its budget or raise revenues by corporate taxes. What's that going to do? Cut back on investment and cut back on these productivity-enhancing investments we need to keep inflation in check. So I think the real danger is that we'll look at where prices are going, and we see these low-wage, low-productivity jobs dominate the wage increases, and we don't have the offset coming in from the high productivity kind of investments that balance off the high pressure from wages.
So what does this mean in terms of Fed policy and what you think it will be in the months ahead versus what you think it should be?
I think Chair Powell and most of the FOMC is still concerned that once we get past these bottleneck price increases, we're going to come back to the world where there's deflationary pressure. If we have the kind of productivity gains we've seen in the last 2 or 3 years, but if the corporate tax increases that are being put in place, not just the U.S., but around the world, start to cut into the kind of investments we need to keep productivity up, then we're going to have a serious inflation problem. And as you mentioned, a stagflation problem where growth starts to hit that upper bound of maybe 0.5% to 1%, and we start to see prices continue to rise.
Bill, we've got to talk about China then. How big is China and what is going on right now a factor in what you're discussing?
I think that's absolutely critical because everyone's looking at China as a leading indicator for where we're going. China came out of COVID fairly early, but right now they're suffering the consequences of their policies, which is every time they see a rise in cases, they shut down the economy, and that kills any kind of growth. And right now, the fear is that the Delta variant is going to cause China to shut down yet again and cause growth to fall way below where their planned targets are. You see the central bank and the fiscal authorities putting in place a lot of insurance policies to bolster any kind of fallback in consumption, which is really the weakest sector in China right now.
Is there a track record that shows they can do that? Can they succeed at policy to boost and sustain consumption?
One advantage of a command economy is they'll be able to boost public consumption, but the disadvantage is that people don't have the confidence that it's really safe to go back to work, and people will not be going out to the restaurants. The people in the cities of Shanghai, Guangdong, and Shenzhen are going to stay at home and say, hey, it's not safe to go out. So we have a split in China where public consumption, public investment is pushing like crazy. They're financing it with a lot of debt, but the private sector really isn't following through.
Bill, great to hear from you. As always, William Lee there, Milken Institute Chief Economist. And Tom, this is the debate of the moment, isn't it? If you focus on the American economy, there was a sign on Friday that we had that first sign in hopefully a series of monthly jobs reports that the supply was arriving. Demand great, supply would respond in the coming months. The news out of China less encouraging, much, much less encouraging over the weekend, Tom.
Well, you're going to get a global feel to it. I mean, Indonesia or China or whatever. I mean, with the Delta variant, there's some huge disparities. John, I would look at this as massively glass half full, 832,000 jobs per month over the last 90 days. And I'm seeing research notes like Lori Calvasina, I thought, had the best note over the weekend where she says, look, it is moving so fast our growthiness is going to click in here sooner than we think. And she directly pushes against Abramowitz.
In the future, Tom, she's looking for more chop, though, that we're not going to get this leadership handoff that's going to stick for several years. It's going to be back and forth, back and forth, back and forth. That's a difficult market.
It's a difficult market. Well, I don't know. I mean, it's great for those that want the vol. It's always there. But again, I look at a general tone here, John, of optimism off that report. What Jason Furman said was great. It's a wonderful report. Go with it.
Look at America, Lisa, glass half full. Look at China right now, glass half empty.
Let's give some numbers to that, right? So the factory gate inflation that we got overnight in China surged 9% in July. You saw core consumer prices rise the most in 18 months. And what this really raises is, how can Chinese officials cut rates further to stimulate growth or even to stabilize some of the financial market turmoil that we've seen recently if you have inflation pressure? Meanwhile, you have people who are actually slowing their purchases because of Delta, because of the higher prices. It's not stagflation, but that is the concern here, is that it will crimp growth the more that this dynamic plays out and the more that these lockdowns persist. And really, how much this bleeds out into the global economy is something that people don't have a sense of yet, John.
To be more specific, it's about whether we get a second wave of tightness rushing through supply chains again, Tom, given what's happened in China over the last couple of weeks. Not at all. I think that's the key risk right now.
I'm sorry. I think this is great. Michael Dardig has a really smart note saying, look, he reaffirms above trend growth. Is it going to be a boom economy? No, John. But again, I go back to the first order condition of GDP. It's good.
We'll get our teeth into that, Tom. It is better than good at the moment. Your equity market looks like this. We're down 5 on the S&P. We're negative a little more than 1/10 of 1%. Starting out the trading week, little changed on the S&P 500. Yields come in about a basis point to 128.34 on 10s, and euro dollar unchanged. Euro dollar 117.59. From New York City this morning, good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The infrastructure bill has now cleared its last procedural hurdle in the U.S. Senate. A vote on the final passage could take place as soon as today. The $550 billion bill is the cornerstone of President Biden's economic agenda. If the Senate approves it, the measure then goes to the House. A new report from the world's top climate scientists sees no end to rising temperatures before 2050. The assessment comes from the UN's Intergovernmental Panel on Climate Change. It says the planet will keep warming unless there are drastic moves to eliminate greenhouse gas pollution. The UN Secretary General calls the report a code red for humanity. U.S. Infectious Disease Chief Anthony Fauci says booster shots should go soon to people with weakened immune systems. That's a further sign of how the Delta variant keeps shifting the strategies for fighting the pandemic. On NBC, Fauci said he supports vaccine mandates at local levels, such as schools and businesses. The highest-ranking aide to embattled New York Governor Andrew Cuomo has resigned. Melissa DeRosa had remained one of Cuomo's staunchest defenders through multiple scandals. She says the last 2 years have been trying. DeRosa features prominently in the report that accuses Cuomo of sexually harassing 11 women. She was described as a key architect in discrediting Cuomo's accusers. ESPN reports that soccer superstar Lionel Messi has already reached a deal with Paris Saint-Germain. Messi said goodbye to his longtime club Barcelona in an emotional news conference. The club is not renewing Messi's contract because of financial problems. He's widely regarded as the best player of his generation. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
How do you assess the sector as a whole? Is it making a better case for itself at the right price at this point?
Most of the big hedge funds, most of the people that have been growing have been delivering very good performance. We have, but so is a number of the peers. You know, it is definitely the hedge fund business is getting more about the large getting larger and generating more performance, being able to hire the best people, thereby generating better performance, thereby getting larger. So when you look at the performance of the largest, say, 20 or 50 hedge funds, the performance has been pretty good over a number of years, and the inflows have been pretty good. You know, this is another quarter of positive inflows for us. I think one of the bits you're seeing at the moment is every client is worried about inflation. When they say they're worried about inflation, what they really mean is, I own a load of bonds, is that going to cause me a problem?